Hey, Action Bank on an ATM card.
No need to stress, I no need the stress. With Action Microfinance Bank, I tell with the best, I no settle for less. Bank where they make it life better. With shaking the money, you fit open accounts. Save money now to pay your bills. And you fit to get it loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. With Action Bank. With Action, oh. My future is bright, oh. Is bright, oh.
Action Microfinance Bank. My future is bright.
Hey, Action. Star 572 hash. Na the code. Action. Star 572 hash. Money go. Open accounts with Action to save for tomorrow. There's an easy way to bank every day. Hey, Star 572 hash. Now here we go. I know get wahala. Oh, it's a life. Oh, money on the go. Star 572 hash. Oh, get a life. Oh, my future is bright. Star 572 hash. Send money to family and friends and business partners on top your phone. Wherever you are, whatever you do, hey, pay your bills and recharge
Jiri
your
ni
phone.
Action Bank we kugo kun. Piano star 572 ash.
Má ṣe ìyọnu láti lọ sí ilé ìfowópamọ́ ìwọ ṣáà ti tẹ star 572 hash lórí ẹ̀rọ ìbánisọ̀rọ̀ rẹ.
Action Microfinance Bank. My future is bright.
Mama soft, you don't dey stock your shop again. Come cut soap for me, abeg. Iya comfort. This one pass soap oh. Na Action loan do me well. Loan care.
Who is going to take the cash prize of 300,000 naira home? Precious King Schools or Homat Group of Schools?
One and nothing less. Lead me to my destiny. I have waited patiently. I have vision, though I believe. I know I can count on me. So stand up for the champions, for the champions.
Good morning, ladies and gentlemen. Welcome to the Action MFB Annual Financial Inclusion Seminar, the 7th in this series. I'd like to welcome everyone who has joined the session. And my name is Paul Ehiagbonari, the Chief Digital Officer at Action Microfinance Bank, and I'll be your anchor for today's event. On behalf of the board and management of Action Microfinance Bank, I'd like to welcome every guest who has so far joined this session. I'd also like to recognize policymakers and regulators who have joined, microfinance institutions, fintech innovators, development organizations, and civil society organizations as well, investors with a focus on social impact, representatives from undeserved communities, thought leaders in digital transformation and economic inclusion, and every other guest from every sphere. Would like to especially welcome you and will believe you have a great time today. Would also like to recognize the presence of the board executives of Action Microfinance Bank here represented, And also would like to recognize our distinguished speakers and panelists who will be subsequently introduced. Our mission at Action Microfinance Bank is to economically empower micro entrepreneurs and low-income earners with financial services in a sustainable, ethical, and profitable manner. And today we are having the 7th edition of our annual financial inclusion seminar series. And precisely today, we are discussing a very crucial topic and answering a very critical question based on the theme digital lending, a path to financial inclusion or a barrier for the informal sector. So we would like you to put all distractions away and give the session rapt attention, and let's learn from the best in the industry. If you have questions, there will be a Q&A session at some point in this session, but just note the questions ahead. You may also drop them in the chat and our team will pick them up ahead of the Q&A session. As highlighted earlier, our mission at Action is to economically empower micro entrepreneurs and low-income earners with financial services in a sustainable, ethical, and profitable manner. And this is part of why we have the annual financial inclusion seminar series. We started this in 2017, and this is the 7th edition in the series. And we address critical issues around financial inclusion, digital financial literacy, because we want to make sure that no one is left behind. And today we will explore this aspect of financial inclusion, especially digital lending, and answer those critical questions we've highlighted, depicted by the theme of the seminar. So once again, on behalf of the board and management of Action Microfinance Bank, I'd like to welcome everyone who has joined the session. And I believe it's going to be a very impactful, very insightful, and very, very memorable occasion. Without further ado, I'd like to introduce the board chairman of Action Microfinance Bank in the person of Mr. Christian Rumer for his opening remarks. Over to you, Christian.
Thank you, Paul, and thank you very much. Good morning, everyone, and welcome. It's a real pleasure for me to have you here at this really important seminar that we have here. We call it Digital Lending, the Path to Financial Inclusion or a Barrier for the Informal Sector. And as Paul mentioned, this is the 7th edition of our Financial Inclusion Seminar, which is a documentation for the importance that we see of financial inclusion. At Action Microfinance Bank, we don't see it just as the right thing to do, but really as a smart way to drive economic growth, as well as to build resilience for our customers and help them to grow. This is far beyond really just a statement or a mission statement that we print somewhere. This is our lifeblood that we do every day. And this is the way we believe in. And this is where we hope that we can also convince many other people to follow us on this path. We'd like to explore the opportunities today and the challenges of digital lending. Everybody talks about digital transformation. Everybody sees the importance of digital transformation. Everybody sees the benefits of that. We just need to keep in mind the people that relied on us most, especially those in the informal sector, who are really a vital part for us, who are a vital part for the economy. We need to find the right way to include them, to use digital tools as a means to help them, not just as a reason in itself. It's a chance for us, for all of us, to question the status quo, to have new ideas, to learn from each other. This is not a competitive environment here at the seminar. We'd like to make sure that we really have an opportunity to gain experience, to learn from best practice, and to share what we think is the right thing to do, because in the end, it helps everybody to have a fair and inclusive environment that is built to last. Thank you all for organizing this. Thank you for the panelists to take their time and join. And thank you for the participants, which are now over 150 so far, which is really great. Thank you for doing this, and welcome everybody. Let's have a great seminar today. Thank you, Paul.
Thank you very much, Christian. And that is Christian Tenrima, Board Chairman, Action Microfinance Bank. To take us further, we would like to invite the Managing Director and CEO of Action Microfinance Bank, Mr. Taiwo Joda, to give, we will be speaking about the Action Microfinance pivotal role in advancing financial inclusion through digital lending. Without further ado, I'd like to welcome Mr. Taiwo Joda, Managing Director and CEO, Action Microfinance Bank. Over to you, Taiwo.
Thank you very much, Paul, and good morning to our distinguished panelists and guests that have made it this morning to our financial inclusion seminar. Permit me to say greetings to our distinguished guests, and I'm very honored and excited to welcome you all to our 7th annual financial inclusion seminar. This is being organized annually by Action Microfinance Bank, and for this particular one, just as we see today, is taking place virtually. Let me give a heartfelt appreciation to the Board of Directors, distinguished panelists, moderators, regulators from the Central Bank of Nigeria, CBN, and the Nigerian Deposit Insurance Corporation, NDIC. Participants from the fintech innovators, development organizations, civil society organizations, leaders in digital transformation, my colleagues in the microfinance bank industry, and even operators and customers that we serve. Others include the representative of international organizations, our invited guests, and everyone who is joining us globally. This year's seminar is themed Digital Lending, a path to financial inclusion or a barrier for the informal sector. This topic resonates deeply with our mission in Action Microfinance Bank, and it also challenges us this morning, everyone, to critically examine the balance between innovation and accessibility of financial services to the underserved, and also in our quest to undergo digital transformation. In Action Microfinance Bank, over the years, we have lived a legacy of impact. For over 17 years, Action Microfinance Bank has remained steadfast in its commitment to financial inclusion, driving change through innovation and collaboration. With 72 branches across 12 states, including the Federal Capital Territory, Abuja, we serve over 360,341 customers, supporting more than 460,000 low-income earners and MSMEs, of which over 50% are women. In this time, we have disbursed over 700,000 loans with a value of 250 billion, fostering empowerment and resilience within the communities that we serve. Innovative initiatives to drive impact. As part of our ongoing mission, we have launched several initiatives to deepen our impact. These include the Community Impact Initiative, what we call the CIO. It is aimed at fostering economic empowerment among the underserved. Secondly, we have deployed robust digital solutions like our Action Money mobile app, simplifying savings and the granting of loans to customers. We have empowered parents and school owners through our revamped school loans and accessible brighter loans. We have developed strategic partnership, and we keep forming new strategic partners I'm happy to mention that we've forged partnership with Women World Banking, SIGAP, and New Faces, New Voices, focusing on reaching underserved women, especially in the northern parts of Nigeria. We have collaborated with the federal government to drive the financial inclusion agenda of the federal government and participated in a consumer credit scheme anchored by the Nigerian Credit Corporation, Credit Corp. This has enabled us in our own little way to disburse ₦1 billion in less than 2 weeks to 1,400 low-income earners in the first tranche. We look forward to further collaborate in the area of renewable energy financing to the underserved markets. Navigating the future of digital financial services. Digital lending remains a critical enabler for extending financial services to underserved communities. However, barriers such as digital literacy gaps, trust issues, and affordability require deliberate intervention. Action MFB is committed to addressing these challenges through a three-pronged approach. One, digital literacy programs. This will help to equip users with skills for navigating our digital platform. Two, simplified and transparent solutions that will build trust and accessibility, and partnering with fintechs and regulators to create an inclusive digital ecosystem. As we explore this year's theme, let us engage actively, share insights, and reimagine financial inclusion through the lens of innovation and collaboration. Thank you for joining this vital conversation. Together, we can chart a path to a more inclusive financial future. Thank you, and God bless.
Thank you very much, Mr. Taiwo Joda, Managing Director, CEO of Action Microfinance Bank. Thank you for your keynote address. Next, we'll be having a keynote address from our keynote speaker, Dr. Tokunbo Martins. We'll have a video introduction and we'll dive right in. Studio, please let's have a video introduction of Dr. Tokunbo Martins, our keynote speaker.
Dr. Agnes Olatokunbo Martins is a prominent figure in the Nigerian financial sector with over 35 years of experience. She has held key positions at the Central Bank of Nigeria, overseeing banking and financial institution supervision and implementing crucial regulatory policies. Currently, she serves as chair of the board of directors for Guarantee Trust Bank, GTB, Enhancing Financial Innovation and Access, EFINA, and the Microfinance Agricultural Learning and Development Center, MLDC. She also holds non-executive director roles in other financial institutions. Dr. Martin's academic achievements include a PhD in finance from the University of Reading, UK, an MSc in Advanced Information Technology, and a first-class degree in Applied Accounting. She is a fellow of several professional bodies, including ISACA, and has authored books on banking reforms and inclusive finance.
All right, thank you, Studio. And so, ladies and gentlemen, let's make welcome Dr. Tokunbo Martins, Chairperson GT Bank, Chairperson EFINA, Chairperson NLDC, for her keynote address. You are welcome, Dr. Tokunbo Martins. Over to you.
Thank you. Thank you very much, Paul. Good morning, ladies and gentlemen. Thank you for that lovely introduction. Let me say that first. It's indeed my pleasure and delight to be here today. I'm really excited to be here. and also honored to give this keynote address. Permit me first to speak from my heart before I speak from my notes that I prepared. I've already listened to the CEO. Quite a lot of things he said are in my notes, so that's why I'm going to speak from my heart, first of all. I believe that the theme of this seminar, the 7th seminar on financial inclusion by Action Microfinance Bank, is something that we really need at this moment. And let's think about it. Can you hear me? Let's think about it. Financial inclusion is something that we really, really need in this country. Let's go down memory lane, back to how it all started. Before we talk about how technology impacts it and why digital lending is so important. When we go back to how microfinance started, start from the 15th century with the Franciscan friars to the European credit unions in the 19th century, to the Axions in 1960, to the Professor Muhammad Yunus in the 70s, to the BRACs also in the 70s, to where we are today. There was one fundamental principle, reaching the vulnerable, the marginalized, those that are economically active, but low income, since we don't want to use the word poor anymore. And that passion, that noble objective is what underpins what we do in microfinance. Microfinance existed before financial inclusion as a subject evolved. It evolved from that. Then all these noble activities were done without technology, and technology has now come to make it better, to escalate it, to accelerate it, to improve it. So I say that if technology has come, it's to our benefit. What else can increase, improve, and make our passion, our mission more impactful? And that's what I want to encourage us on today. However, as we've already noted, digital lending, which is just one aspect of being included, and the use of technology can have its positive side and its negative side. I always say that technology is something that amplifies, accelerates, and improves. But the same way that technology can improve a good process, an efficient process, it can also escalate, cascade, accelerate a bad, inefficient process. In those days, when we used to go to banks with bags of cash and checkbooks and things like that, to either to deposit money or take away money, our most critical fear then was highway robbers. Now, the threat is no longer physical, it's now virtual. And I tell you, it has been accelerated, it has been made easier, and that's why we have to be very cautious. What we fear now are no longer highway robbers, it's digital highway robbers, cyber criminals, digital fraudsters, the scammers, and stuff like that. So, depending on how we design our platforms when we want to do digital lending, it can either help with financial inclusion, or it could be a barrier to the informal sector. So let's look at the current landscape of DFS in our country. And I'll start with Athena's A2F report. Our latest report shows that overall DFS adoption increased across all channels growth averaging 110% over the last 3 years. And that is quite impressive. But note that I said DFS, not digital lending. In DFS, the largest growth was observed in the use of agents. That grew by 250%. Other segments of DFS that grew were ATMs, debit cards, mobile money operators, etc. What is also important to note is that in 2020, the usage of digital microfinance banks was negligible. However, it has grown significantly. By 2023, we had about 1 million adult users. And we can find all this in EFINA's A2F latest report. As you know, EFINA is an advocate, the main advocate for financial inclusion in this country. Now, this significant growth shows that digital financial services platforms are becoming increasingly acceptable, adopted, especially by youth that are technology savvy. The banked population has also grown significantly from 38% in 2018 to currently 64%. But our concern is the 36% that remains unbanked. And that's a catch area for all of us in our industry. What are we doing about it? If technology has come to the world, it has come to the world for our benefit. We have the passion. We used to do this traditionally before. Now technology has come to help us. This is the time to dive in and capture this 36%. It might interest you to know that data from the Central Bank of Nigeria shows that for credit accounts, microfinance banks have twice the number of commercial banks. I'm not talking about value, because when it comes to value, the commercial banks give, of course, bigger loans. But when it comes to the number of credit accounts, microfinance banks give twice as many people as the commercial banks. And so you can imagine we have technology to scale that up. Now, of those using DFS, that is out of the 64% of the population that are banked, of those using DFS, only 25% were rural dwellers, 33% were women, 36% were youth, and 34% were from the north. Remember that these constitute the most underserved and vulnerable segments of the population, and they also highlight significant opportunities and gaps for financial inclusion. We also see that digital lenders have increased from 94 last year, January last year, to 211, so almost doubled by the end of last year. So that is also another opportunity. But what is happening to credit? Credit remains dismally low. The total proportion of savers is 38%, as at the last survey, our last survey in 2023. However, credit is 6%, only 6%. Only 6 in 100 people of these underserved, of these rural, informal SMEs are able to borrow. If we look at credit overall as a percentage of GDP in Nigeria, it's only 19%. When I checked, I was even surprised it had gone as high as 19%. But even 19% is not good enough. When you look at South Africa, that theirs is over 90%. So we still have a long way to go, and technology can help us. Over the past decade, digital lending has emerged as a transformative force in financial services. But then it also depends on the way we use it. We constantly hear from the news, institutions, financial service providers that are being hacked or that have been hacked. There's hardly any financial service provider, be it commercial banks, be it microfinance banks, be it payment service banks, be it MMOs, be it fintechs that haven't been hacked, haven't had their own brush with hackers and cyber criminals. So in designing our systems, that's one thing we have to have in mind, because that is one thing that can make it become unattractive to the informal sector. Yesterday or 2 days ago in the news, we read that the Central Bank of Uganda lost, I think it was about $16 million to cyber criminals. That money was transferred to Japan. Now, if that could happen to a whole central bank in Africa, then what about us? So we really need to be careful. Of course, digital lending, we've already made the case that lending, credit, is really, we need it critically, desperately in this nation, because credit is the oil, it's the lifeblood, it's the engine of any economy. That's the way we can make SMEs grow, and SMEs form the largest proportion of this economy. That's the way we can revitalize prosperity, not only for individuals, but for our economy. That is credit, which we've always done traditionally. Digital lending, we have already said, can amplify this. It can reduce barriers such as geographical constraints. There's always the issue that some places are too far, then the rural areas, it's too expensive to get there, it's too insecure to get there. But with digital lending, there are no barriers. Also, it can also help us overcome some other rigid banking requirements that keep some people out, like the need for credit histories, the need for collateral, and so on and so forth. But we must also remember how vulnerable the informal sector is when it comes to financial literacy. Yes, they may have smartphones and the likes of it, but how much do they really understand? How much do they understand that they can get themselves trapped into debt traps, become over-indebted, and so on? And I mean, this is our industry. We all know what has happened in our country in the microfinance sector. And that's even when we're doing things traditionally. People do get into debt traps. We've had crises in the microfinance industry in this country time and time again, whereby so many microfinance banks had to be closed down. Moving away from Nigeria, there's the famous one, the Andhra Pradesh crisis in India. And that's a country that was growing so fast in microfinance, and then bang, look what happened. And there's one currently going on in Cambodia. Cambodia is a country that has given so much to microfinance, but there have been accusations that that has resulted in so many people becoming over-indebted. Probably maybe they didn't understand what they were doing, and that's why financial literacy is very important. So, what do we need to do? That's the most important thing. Let me go back again to EFINA's 2023 A2F survey, and it highlights critical challenges in the microfinance sector. I repeat, critical challenges in the microfinance sector. According to the survey, many customers reported experiencing poor service, unexpected charges, and this reflects potential issues with billing transparency. Many faced an inability to access their accounts, and this raises concerns about operational reliability and accessibility. Some also experienced rogue recoveries and harassment, and that underscores a pressing need for consumer protection and ethical practices on the part of microfinance banks. Other issues in the news media include fraudulent use of BVNs, social engineering, phishing, and data privacy issues. If these findings are unaddressed, I think what it can result in is obvious erosion of trust, lack of confidence. Of course, those that we are seeking to include will become scared of being included. So addressing these concerns is vital for facilitating and promoting the microfinance sector as a critical driver of digital financial inclusion, and more importantly, digital lending, which we desperately need to grow our economy. And we can do all this alongside our traditional products and services. So the first thing we need to do is that we need to build trust through transparency and ethical practices. Transparency in interest rates, terms of repayment, fees, all that is non-negotiable. Like the CEO already said, we must prioritize simplicity and clarity in our platforms so that the borrowers know what they are doing and they don't receive some sudden unexpected shocks. They should fully understand their obligations. And then we need to be ethical in our practices. Our platforms should serve as enablers and not exploiters or discouragers of the underserved population. Going back to technology and the way it amplifies and accelerates, we can use technology. It's amazing in so many fields. When you read about how it's being used in agriculture, in health, all over the world, it's so amazing. And it can be the same in our industry. In fact, it's already the same. It's just for us to tap into it. Many of the people in the informal sector, one thing that they don't have are credit histories. So how about using their mobile phone records or their utility bills, the way they pay their utility bills, those patterns as a way of giving them credit histories, giving them reputational collateral that can help them to borrow and that at the same time can help us reduce our default rates. And then to even make things better, artificial intelligence has come along. And that is just so amazing, and machine learning. And that can help us design products that actually match our customers' repayment abilities so that they can have a product that is suited, tailored to them, and also helps them to be able to repay and default less. Collaboration is key if we're to have a scaling impact. So we need to collaborate with regulators, government, who should come up with policies that will encourage the use of digital financial platforms and lending without stifling innovation, but they should also protect the customer. In terms of financial literacy, educational gaps, collaborating with communities, rural communities, maybe village heads is also very important. And then, of course, I heard fintechs are also present here, partnering with digital lenders, fintechs, can also help us develop hybrid models and hybrid products, and in addition, add the credibility of traditional banking. I must also say, I've already said it, but we need to guard against digital fraud and cybercrime. And all that means is that we must have, as we build our systems and as we leverage the passion that we have for the excluded, we must also have that same passion to make sure that our systems are secure, accessible, and safe. We must have robust cybersecurity infrastructure in place. We should have real-time fraud prevention and detection systems in place. So, as we expand access to financial services, including digital lending, we must let inclusivity, sustainability, and ethical practices form the foundation of our services. We must ensure that no one is left behind, especially the underserved populations that we already spoke about, the women, the rural populations, the SMEs. We must create systems that support long-term growth, not only for the borrowers, but also for the lenders. And this includes managing risks from fraud, cybercrime, over-indebtedness, and ensuring that our platforms remain viable. And very importantly, our profit motive must never overshadow the mission of fostering empowerment and economic stability for the underserved populations. And I say that is one thing, that is one noble, magnanimous, virtuous objective that distinguishes us from other financial service providers. That combination of, or rather, should I say, the overarching goal of a social impact, but at the same time, a profit impact. But we must be careful not to have a mission drift, allowing the profit motive to overshadow the social motive. As we discussed today, let us remember that digital lending is not just about technology. It's about human beings. It's about people, real people. It's about creating opportunities to individuals and communities to thrive. So I encourage us today, let us address the hard questions. How do we ensure digital lending does not unintentionally exclude those it seeks to serve? What guardrails do we need to prevent digital platforms from becoming predatory? How can we leverage technology to empower the most vulnerable, ensuring that progress is truly equitable? And finally, how do we sustain trust by keeping our systems available, secure, and safe? In closing, whether digital lending is actually a valuable, good tool for financial inclusion, or whether it serves as a barrier to exclude the informal sector, depends on us. Our collective intention and efforts to innovate with integrity is what is going to keep everybody in and make the future prosperous for individuals, the underserved, and the economy as a whole. Thank you very much for your attention, and I look forward to the insightful discussions that I know will come forth. Thank you.
Thank you very much, Dr. Tokunbo Martins, Chairperson GTB, Chairperson EFINA, Chairperson MLDC, for your profound keynote address. I'm sure we all gleaned some deep insights from her keynote address. And one of the striking things that she mentioned is we have to make sure that those we are thinking of being included will not get scared of being included. So, and this calls for action to all parties involved in driving financial inclusion. Thank you once again, Dr. Tokunbo Martins. We appreciate your time and we appreciate the keynote address. I'd like to mention at this point that we have the event brochure in the chat. I mean, there's a link to the event brochure on the chat. You can click on it to download the event brochure so you could see the lineup of activities, the lineup of speakers, and the lineup in terms of the structure of the events. To take us further, we will be going into the panel sessions. But today, we have two panel sessions. The first panel session is going to answer a critical question, and that will be, is digital lending truly expanding access to credit in the informal sector? This builds on the managing director's address that touched on Action Microfinance Bank's pivotal role in advancing financial inclusion through digital lending, further built upon by the keynote address of our keynote speaker, Dr. Tokunbo Martins. Impactful financial inclusion, how do we ensure no one is left behind? So the first panel will draw from that and dive deeper and answer some of those questions. And then we'll go into the second panel session, which will touch on the digital divide and answer the crucial question, is transformation excluding the poor? We have a lineup of speakers, best in the industry, those who have touch with reality, who will be able to bring to life these topics of interest. As we proceed to the first panel session, we would like to take a video introduction of the panelists. And ladies and gentlemen, we'll bring them forward, and I'll call on the studio now, and let's have the introduction of panel one panelists. Thank you.
Tolulope is an exceptional regional gender economic inclusion expert with a strong focus on women's economic empowerment, women's financial inclusion, digital financial services, agricultural livelihoods, climate finance, SME, MSME financing, and sustainable finance. With over 10 years of hands-on experience, she has been instrumental in guiding the design and implementation of gender transformative initiatives at both country and regional levels. She possesses a strong thought leadership skill set which covers policy advocacy with governments and the private sector, public speaking and writing research papers, op-eds, and articles relating to gender mainstreaming, access to capital, economic inclusion, food security, and climate resilience. She is keen on using her voice to create visibility on women's economic empowerment in Africa while leveraging data and contextual insights. Dennis Monyote, CEO of Rubix at Rubix, financial institutions and digital platforms, are equipped with the expertise and technology to lend to small businesses with less effort and risk. To service providers with MSME customers in emerging markets, they offer end-to-end lending solutions that push the potential of artificial intelligence, AI, way beyond smarter credit decisions. Rubix is the only digital credit partner that provides lenders in emerging markets with accelerated growth through profitable loan products tailored to the behavior of informal borrowers. To service providers who lend to small businesses in emerging markets, Rubix is the cloud lending platform that inspires a new generation of loan products that meet the evolving expectations of borrowers, access data analytics and artificial intelligence to improve products and operational performance, accelerate digital transformation. Ms. Olanike Kolawole is a distinguished professional with over 3 decades of experience across banking, pharmaceuticals, and FMCG sectors. Her career highlights include senior roles in banking, where she excels as a development finance and financial inclusion expert, sales coach, trainer, and growth strategist. Olanika has made significant contributions in East and West Africa through pioneering financial innovations and enhancing inclusion. Notably, she has led initiatives in digital banking and mobile money, revolutionizing retail operations and launching new products. Currently serving as COO ED at the Nigerian Consumer Credit Corporation. She was Director of Financial Institutions, Key Accounts at Emerging Africa Capital Group. Olanika previously held pivotal positions at Ecobank Nigeria, Ecobank Kenya, MBC International Bank, and SKG Pharma Limited. Committed to women's empowerment, she spearheaded the Ecobank Female Entrepreneur Initiative and mentors young women. Chukwuma Nwanze is a seasoned financial expert with over 22 years of experience in diverse roles. He has held leadership positions in various industries, including consumer lending, management consulting, oil and gas, and fintech. Currently, he serves as the Managing Director of Credit Direct Finance Company Limited, a fintech subsidiary of FCMB Group. Under his leadership, the company has become the largest and most profitable finance company in Nigeria. Nwanze is a passionate advocate for continuous learning and gender equality. He is a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and holds an MBA from Warwick Business School. He is also a doctoral candidate at Edinburgh Business School. Beyond his professional roles, Nwanze is a sought-after trainer, having facilitated numerous sessions on business, finance, and strategy for various organizations in Nigeria and the UK.
Right, thank you, studio. Without further ado, I'd like to hand over to the moderator of this first panel session, the person of Ms. Tolulope Babajide, Gender Network Manager of FSD Africa. Over to you, Tolulope. Thank you very much.
Thank you very much, Paul, and good afternoon or good morning, depending on where you're joining us from. Thank you so much for, to ASEAN Microfinance Bank for organizing this amazing webinar session. And it's been really amazing listening to the keynote speaker, Dr. Martins, and also to Mr. Taiwo Joda. And I believe that they've really laid a great foundation for this particular panel session. It is an honor and pleasure to be here today, moderating this important panel discussion titled, "Is digital lending truly expanding access to credit in the informal sector?" What a great question that is. I'm privileged to have a lineup of esteemed speakers who bring a wealth of knowledge and experience to this topic. And like many of you, I'm looking forward to gaining valuable insights from their presentations and discussions. But before we begin this conversation, and I pose questions to my speakers, I would like to establish a bit of context in which Dr. Martins has greatly alluded to, which is the current state of the digital lending in Nigeria. Over the past few years, we've witnessed remarkable growth in this sector, primarily due to the rise of fintech companies that have changed and created access to financial services. These organizations offer consumers an unprecedented level of convenience, allowing individuals and small businesses to secure loans quickly and easily through various digital platforms, often with minimal documentation. However, this rapid expansion has not come without its own challenges. The largely unregulated nature of the digital lending industry in Nigeria has led to a host of ethical concerns, including exorbitant interest rates, a lack of transparency in lending terms. This issue presents significant barriers, especially for those in the informal sector who are already vulnerable and seeking financial support to improve their livelihoods. With this context in mind, I'm very eager to hear about our panelists' perspectives on whether digital lending truly serves as a pathway to financial inclusion, or does it create obstacles for those it aims to help? Starting us up, I will be starting with Mrs. Olanike Kolawole. Mrs. Olanike Kolawole.
Good morning.
Good morning to you, ma'am.
Yeah.
It is nice having you here today.
Thank you. Thank you.
Thank you. I'll start with my first question, which is, how are digital lending platforms overcoming infrastructure and connectivity issues in remote and underserved regions? And I will sort of bundle this question with another question, which is, what is the role of Credit Corp in ensuring that these challenges are addressed and last mile users are reached?
Okay, if I understand the question very well, you're saying how convenient has it been for the consumers to have access in remote areas?
Yes, but particularly how has the different digital lending platforms, how have they been able to overcome infrastructure and connectivity issues in remote and underserved areas? And what has been the role of Credit Corp in ensuring that these challenges, I mean the infrastructure and the connectivity issues challenges, are addressed so that the last mile users can be reached?
Okay. Thank you very much. When it comes to infrastructure, basically what most digital lenders use, well, their scoring modules, they use basically information that they're able to collect from these borrowers based on how they use their phone and other information they're able to gather from them. I mean, the scoring model is just basically based on information they're able to collect from them, and is on the basis of that that will determine the amounts that is available to the people. And in terms of accessibility, the mobile phone has been the greatest platform for access right now. In Nigeria, we have, I think we have over 205 million mobile phones. So the mobile phone has really helped in terms of access. I mean, you don't need to go to a physical branch when you want to have access now with what the fintechs have done. I would say the fintechs have done a great job in actually disrupting this market greatly. And we saw the impact last year, 2023, when everything went bizarre with no cash available and people will have to transact. And the agency banking platform actually really helped. I mean, wherever you still have access to cash. So people are able to learn, and then there's an agent network there where you can even access if you need access to cash and whatever you get on the mobile, in case you need physical cash to actually transact apart from mobile. But for us in Credit Corp, one of the major reasons why we are established is to actually help with the issue of infrastructure. What we are set up to do is to have credit score for every Nigerian. We have started in one way, but it's likely to take some time. The ultimate goal is to have a central credit register for the whole country, and every Nigerian will have a score. We will gather data, financial data, non-financial data, and we're working with a lot of partners to put this together. Is a medium-term goal, but the goal is for every Nigerian to be scored. And if you are scored, your score will be on your NIN. So whosoever is dealing with you, it will actually make life easier for even the digital lenders and even non-digital. I mean, the whole of financial services. Once you have a score, there is a kind of comfort to lend, and these huge interest rates that people are given now. I mean, if the score, if you have some comfort on the score, the interest rate will go down and all that. So our primary role is the infrastructure for the whole country, for every Nigerian to have a score. And with that, it will be easier for even the banks and the fintechs to be able to learn, and then the interest rates will be a bit more realistic than what we see right now. Because what we see out there now is crazy. And you imagine, how do people actually pay back this loan with this huge interest rate? Thank you. So the agency banking too, like I said, will really help with the remote area. The agency banking, just like Mrs. Martin said, Dr. Martin said, agency banking has grown by over 250% again, even compared to what we experienced last year. So in terms of financial services access in remote locations, I mean, they've done good job. And I must say, the fintechs have done good job in disrupting this market. And so greater inclusion of almost 65%. If we had even those informally included now, I think we'll be about 75% financially included. Thank you.
Thank you, Mrs. Kolawole. And it was really amazing to hear about what Credit Corp is doing, ensuring that every Nigerian is able to have a credit score, is able to have, by you gathering the non-financial and the financial data and being able to aggregate it and put it on the NIN, that is really, really innovative. And once again, you also reiterated the importance, the significance of fintechs, and now they are very essential to closing the financial, I would say, financial exclusion gap. And it's really amazing to also know that it is important to fully regulate the fintech so much that people that are already vulnerable, we are not also doing harm to them and they are becoming more vulnerable. So thank you so much for sharing about the work that Credit Corp is doing. I'm coming back. I have a question. I have several questions for you, but I will be back, Mrs. Kolawole. Dennis, are you ready for me?
Yes, hello. I'm fully ready.
I hope you're joining. Are you joining us from Senegal?
I'm joining up from Senegal, yes.
Okay, how's Senegal this afternoon?
Okay, great.
Okay, so Ruby X is in Senegal, right? And I would really want you to share with the audience specific case studies from either Senegal or any other geography where digital lending has effectively breached the credit cap for the unbanked. What are the lessons that you can draw from these examples? It will be great to hear you speak about Ruby X penetration in this in the markets where you are, and also to share specific examples how you've been able, how your organization has been able to bridge the credit gap for the unbanked in your market. Over to you, Dennis.
Yes, thank you, and thank you very much for having me. So yeah, Rubix is based, operates from Senegal. We partner with microfinance banks and fintechs all over the continent. We have clients from Madagascar to Senegal, all the way from entire Nigeria, Ghana, and so on. So I'll take a few examples. I think before I jump into the example and the case study that I think will illustrate very much this idea of further penetration, I think there is something quite interesting to reflect on, is the fact that when a new technology is made available, we actually have two different reactions. One reaction is to say, okay, I'm going to use this technology to do pretty much the same thing as I was doing before, but to doing faster, more efficient, and so on. And then the other alternative is to say, okay, how much is this technology changing the game? How much can I actually challenge my own operating model and decide I'm going to do things very differently? And I think the first trend in adopting technology in lending and starting with digital lending has been pretty much the first one to say, okay, now in microfinance, we used to spend a lot of time and resources on understanding the client, evaluating the clients to reduce our risk and keep our risk low. With the rise of technology, we've seen the first digital lenders basically have a starting point that was, now we can maybe not allocate all these resources, this staff, and these operating costs into evaluating the clients, because we'll have computers, algorithms do that for us. And it's okay if we have much more losses, loan losses, because we have much less operating costs. The problem in that equation, and to me, it was really that the first adoption of digital lending was just based on that reasoning. And the big problem with that is the one we are talking about today. Is loan losses is maybe just a financial loss for the bank, but it's actually millions of people who are being brought in troubles. Nobody likes to have defaulted on their loan. Or the vast majority, everybody who's not a fraudster actually doesn't like it and is put in trouble. And that's basically a story we've seen and looked at very much in detail, every one of us, from the first years of digital lending in Kenya. I think the alternative, and I think this is what we should really pay attention to, in particular as the microfinance industry, where we've always been keen to really assess clients and do not harm, because we are there for financial inclusion also, and so on. So it's quite important not to just take that and do exactly the same for the reason I explained. I think the alternative is to say, how can this kind of technology really change the way we operate? How can we actually really change things? And I think one of the answers that Rubix is bringing to this question is to say, maybe we should look at not exactly the same model where we wait as a bank for a loan application, and then we respond to that, and then we transfer actual money to the applicant and becomes a borrower, and then we chase him. No, maybe we can use, before even people apply for a loan, we can use the existing data and figure out first, who do we want to lend to, and control that environment. And there is more and more beyond financial services. There is a lot of things that are happening now digitally, online, and all of that is generating digital footprint, is generating a lot of data that we can use. Then how can we also use these existing digital ecosystem to have a sort of lever on repayment? So it's a way to really change our model and say, okay, and what am I talking about here when I say these two things? I'm mostly, I think a great example of that is embedded lending, whereby the bank, instead of waiting there and having its own direct customer relationship and direct customer onboarding, will partner with digital ecosystem, get the data that this digital ecosystem have generated, and these relationship between a provider and a user, or provider and a client, and use this relationship also as a way to assess the creditworthiness and to work on collection. So my example, because you asked me for a case study, my example is here in Senegal. We have this client called MAD. It's basically a small, it's a supplier to very small shops in Senegal, the very, very tiny shops at the corner of the street that sells all the FMCG product that people need in all the neighborhoods. They have about 15,000 of these shops that they provide goods every day or multiple times a week. And basically what we do is we ingest all this data about which shop has bought which products, which price, and how much how quickly do they have to restock this. And using this data, we've been able to finance these small shops directly through their providers. So now the small shops can actually buy on credit. We don't call it buy now, pay later, because that's more referring to consumer lending. We call it stock now, pay later, right? So this is an extremely low risk product, almost no default up to now. It's because the borrower doesn't feel like they're borrowing. They feel like they're just buying stock from their usual supplier. They sell it and then they pay their order a little bit later. So it's both a profitable lending product. It is very low risk. It addresses a population that up to now was completely financially excluded, because we are talking about loans that can go maybe up to $400, $500 at maximum. The average would more be around $150, and we are talking about loans that will last maybe around 10 days. So it's impossible for microfinance to make decisions for $150 every 10 days, every week, make this decision again and again. And also operationally, it's very efficient because we don't have to send credit officers for collection is just about paying your orders a little bit later. So we see, in conclusion, my message is we see that when we just don't do the exact same lending and try to replace our operational costs with loan losses, but that we reinvent and that we are proactive in going and building new embedded products, we can at the same time be efficient, keep risk quite low, as well as reaching people who were financially excluded up to now.
Thank you so much, Dennis, and thank you for the recommendations, for the you sharing your experience from the other markets in Africa. And you mentioned something about the product that you have now, which is really about it's almost an instantaneous working capital that allows whether it's a retail trader, whether it's a farmer, to have access to that fast capital, and in turn they can also repay very easily, and that is really, really good. I'm sure that a lot of microfinance or fintech organizations that are on this platform, that are on this call now, are listening, and they can also adapt, and this is really good. And before I go to Chukuma, hello Chukuma. Hello Chukuma, Mr. Inwaze.
Yes, I can hear you. Can you hear me?
Yes, I can hear you.
All right.
This particular question is a question that is very dear to my heart. I'm a gender expert, a women's economic empowerment specialist, and I work a lot with women from various segments, but particularly women from underserved areas, women with low income livelihoods, women that are living in rural areas, women in hard to reach areas. But the truth is that these women are highly hardworking. They break their backs, either in the market or on the farms, and they have financial needs. And majority of the majority of their financial needs have been solved by the informal sector, either by them being a member of a saving groups, of a cooperative, but it is now that we have the digital lending platforms. I will now direct my question to you. How do you think the digital lending platforms can penetrate remote areas to serve these underserved segments, such as women farmers, women retail traders, in a situation where formal banking is virtually not existent? Do you have examples of success in these regions?
Yeah, thank you for your question. I think your question actually does speak to the heart of financial inclusion, primarily looking for solutions for those who are excluded and those who are underserved. I think one of the big advantages we've seen over the last 2 decades or 2 decades and a half is the proliferation of mobile technology. And the improving internet penetration we see in the country. But I think the major thing is mobile technology. We ran a survey at our organization, Credit Direct, a few years back with about 2,500 respondents. What was interesting as one of the outcomes of that survey was that about 8 in 10 people we had surveyed from 36 states of the country had mentioned that they had a smartphone. And whilst there's a huge belief that the guys who are at the base end of the pyramid or are in remote areas don't have access to the right kind of technology, that survey proves to be different. I think we're looking at something from Athena where it now suggests that almost 6 in 10 or 7 in 10 people actually have access to mobile phones, and at least 1 in 2, right, are happy to be served digitally. Now, mobile penetration is for me the solution to reaching the underserved or the excluded with financial products, whether it's from credit to insurance to savings or wealth creation, micro pensions or the rest. And I think since there's a mobile phone in the hands of many Nigerians, it's now the responsibility of financial institutions to provide solutions that help provide solutions using that kind of channel that can help bridge the exclusion gap that we currently have. I mean, there has been a lot of improvement. The work of EFINA, fintechs, FIs like ourselves have helped bridge that gap significantly over the years. But there's also the need for us to keep on pushing it. At Credit Direct, for example, today, 3 in 10 of the loans that we give happen through our USSD platform. Through our USSD channel. And what you would see is that customers now get access to credit in a matter of minutes anywhere you are in the country. I would argue that every month we are giving credit to at least a minimum of 30 people in every state in Nigeria. I've seen, for example, looking at a recent report, that USSD adoption had doubled between 2023 and 2024 in places like Borno, in places like Bauchi, and places like Adamawa State, where you would easily argue that they may not be at the excitedly high end of digital or technology appreciation, but we're seeing those numbers change dramatically day in, day out. And I believe strongly that the more FIs working hand in glove with entities like EFINA, the central bank, more collaboration than this excitedly beautiful thing Action is doing, the more stakeholders push on this financial inclusion agenda, we'll see those solutions reach more people. From what we do at Credit Direct, like I've said, we've seen these numbers pretty much triple over the last 2 years. And at the back of this was leveraging digital technology. I like what Dennis was talking about when he talked about automated credit decisioning, right? The more we can layer using different data points, and there are lots of data points that we see across the sphere today, especially in this digital age, the more we can leverage data, the more we can use technology to automate credit decisioning, and then we leverage digital channels such as mobile and app. There will be no need for that brick and mortar banking infrastructure. There will be no need for people to travel long distances to get a service, and ultimately it becomes more efficient and solves problems. I think when Dr. Martins was speaking, she talked about credit being the engine, or being the oil that will the oil that will lubricate the engine of any economy. And I think it's absolutely important for us to significantly bridge that gap. I think the central bank's objective is that I think the original objective was that by 2020, they wanted about 40% of Nigerians to have had access to formal credit. I know as of 2020, it was at 4%. And 40% is nowhere near the 90% we've had happens in South Africa. So there's a lot of work to be done, but leveraging technology, leveraging digital channels that are ultimately cost efficient for businesses anyway, right, will help us bridge that gap. And the more credit savvy an economy is, the more prosperous the economy will be. I love what Ms. Kolawole has spoken about as to what Credit Corps is trying to do with respect to providing that unique credit score for every Nigerian. It doesn't ultimately help improve the decisioning that will be made. It gives lenders or financial institutions the wherewithal to bring more liquidity to the market, and ultimately we'll see the economy boisterous as a result of this. So that's what I'll have to say for now.
Thank you, Mr. Nwanze. Thank you very much for sharing about the work that you're doing. And it's really amazing to hear you speak about the penetration of your organization when it comes to ensuring that all states within the federation are able to, access credits through your organization. It's really amazing to hear that. I'll quickly go back to Mrs. Kolawole. Mrs. Kolawole, you mentioned about this innovative initiative of the Credit Corps, which is really about ensuring that every Nigerian has a credit score. But the question that I will put back to you is that what is the level of interoperability between Credit Corp and other financial institutions in ensuring that the financial institutions are able to have in real time access to the credit score of all Nigerians? So, for example, I'm a young woman. I want to take a loan from Credit Direct, and I need the loan in the next, I need to access that loan in the next 48 hours. Is it possible for Credit Direct to see my credit score in real time based on the data that is being provided by the credit score? What is the level of this interoperability, and what sort of partnership is also being facilitated by Credit Corp with other financial institutions? We have some interesting questions in the Q&A, but over to you, Mrs. Kolawale.
Okay, thank you so much, Tolulope. We'll start from what Mr. Chukwumanwa said about the essence of credit in every economy. Credit is a multiplier of the GDP. For us, it's just about 14% for us. For developed economies, about 150 up to 200% of the GDP. And that's why the issue of score for everyone is so important. We started operation in July. We're just working on this. It will take us about 18 months to 24 months. We're talking about getting data on everybody, both financial, non-financial. It's a huge one, but we're not doing it alone. We're doing it with financial institutions too. They are joining us because the expertise, the knowledge, what they have, the data they have, even a lot of what they have right now for what they're doing is also needed. So we're not doing it alone, we're doing it together. So we don't have it ready right now as we are. But like I said earlier, even apart from interoperability between us, because what we're going to have is a kind of central registry for the whole of the country, so everybody will have access. Not only fintech or microfinance, all financial institutions will have access, and then every Nigerian will have it, even on their NIN. So, I mean, as you carry your NIN, people will know. Even when you want to rent a house now, your landlord will know your score and know whether you are creditworthy and you'll be able to pay for next month's rent or next year's rent. So because of the importance of credit in actually moving this economy forward, that is why this infrastructure is key to us now. Because I mean, even the commercial banks, what they're supposed to give us, they are not doing so much because of the risk involved in consumer credit. Dr. Martin showed us that only 6% of about 73 million of us that are working in Nigeria, only 6% has access to credit. And it is after you've added informal sector, you get to that 6%. If you talk about only formal sector, it's only 3%. So getting a score for the whole country and a central credit registry for the country is so key. So we're on a journey and everybody will have access. But this access to credit, like Mr. Nwanze said, is so important to actually move this economy forward. And the gap is huge. What we are right now, the whole of the country, about 34 trillion, and we should be doing like 50% of the GDP. That's about 175 trillion is what the consumer credit should be in Nigeria. So the gap is huge, and that is why we are created to do that. Although there are other things we have already started with since we came up in July, Axiom, even Credit Direct, they are benefited from what we have, which is we give wholesale to them for all-one lending to reduce the cost and then reduce interest rates. So we have beneficiaries in the house who can testify to what Credit Corp has done since we kicked off in July. Thank you.
Thank you so much, Ms. Kolawale. It's so interesting to hear about the wholesale lending because at the end of the day, people The reason why a lot of people shy away from taking credit is because it's expensive, expensive loans, and the interest rate is also very exorbitant. So a lot of people just really shy away from it, but it's really interesting to hear about this wholesale lending, because which then allows the likes of Credit Direct, Action to have access to cheap capital, which they can on lend at a with a very considerate interest rate. But there's a question in the Q&A which really is interesting also. Innocent said, my concern is on traditional versus digital lending. Is it really possible that digital lending can replace traditional lending in its entirety when compared to the illiteracy and poor tech savvy of rural dwellers? Before I pose that question to Mr. Nweze, it's also important to allude to the great benefits that the informal lending has, how it has really supported a lot of people. It has supported their livelihoods. This is not to say that traditional lending in itself is bad, but how can we ensure that there's a blend? How can the digital lending platforms actually really leverage the traditional methods of lending and being able to use it as use it as a leverage to ensuring that they are reaching the last mile users? So, Mr. Nweze, what will you say about traditional versus digital lending? Do you believe traditional lending in itself should be totally phased out and should be replaced with digital lending? And if you believe that it should be replaced, it should replace traditional lending, why? And what can you say about that? That is a tricky question.
Yeah. Thanks for that question, Minister, and thank you. I think one way to look at it is the evolution that is taking place in the world, right? Especially as we see the proliferation of technology will be the answer to that question. If we cast our minds back 30 years ago, the question we'll ask ourselves, how was telephoning working in Nigeria? We had phone booths. There were long queues to go and make a phone call. You had to put a coin in a coin box to be able to make a call. And very few people had access to mobile telephone then. If you roll forward 30 years later, everybody, we're talking about more than 100 million Nigerians having access to a mobile phone today. Traditional lending is that paper-based, boot-on-the-ground approach to get information from a customer to determine whether he's eligible for credit or not. Now, what we must understand is that what digital does is to simplify what the traditional method seeks to achieve. So all those forms that we fill, the objective is towards KYC, is towards knowing the customer, such that in the event of a default or otherwise for any other purpose, I can say that Tolokwe is my customer. In today's world, for example, with BVN and NIN, 95% of the information you're filling on the form, all those biodata information, are already available on the NIN. So with an integration with any of the fintechs, with NIBS or the rest, you can have access by just saying, give me your BVN number. Now, if you look at the BVN number, I think the last I checked, we're looking at about closer to 70 million Nigerians now have a BVN number. I'm not sure of the number of guys who are on NIN. 70 million is a huge number in itself. It's bigger than England, right? It's probably a combination of Ghana, Niger, Togo, and Burkina Faso put together, right? So that's a huge number in itself. And I think it's progressive. This wasn't the number 4 or 5 years ago. And we're going to keep on seeing that. Traditional we will be seeing improvements, like we've seen with how we move from old school telephone to today. We've seen how we've moved, even in terms of how we communicate. My mom is 84. My mom sends me messages on WhatsApp, right? She may not be as proficient in the use of it as I am, but we are seeing step changes. Now, we all have a responsibility to keep educating the populace on the benefits attributed to it. Good products that are leveraging technology are actually easier to use than the more difficult progress and more difficult processes that we use traditionally. So it will take time. We will educate, but we are seeing significant progress year on year. And so long as there's no retrogression, in a couple of years, it will be, we'll see that steady. Another thing you should bear in mind is that Nigeria has a very young population. A lot of the people who are maybe 55 or 60% of the population are age 17 and below, right? So these guys have been born into a very digital first, very technology ready age. And so it's just a matter of time that we're going to see significant changes in adoption. It'll make it a lot easier, and then the financial inclusion gap ultimately will close. So yes, traditional will be phased out. It's going to take some work, but it's just what's going to happen naturally. Thank you.
Thank you, Mr. Nweze. And it's really amazing to hear you talk about how mobile telephony has really changed the landscape of lending, ensuring that people are transitioning from that traditional form of lending to this digital lending. But also, do not let us forget that there are still institutions like saving groups, like informal saving groups, like Esusu, in some places that are still very efficient. So my recommendation would be, how can the digital lending platforms, how can they also really understand the these various informal lending platforms that I would, and ensure that they are able to use it as a gateway to reaching the people that are currently unbanked, or people that would typically shy away from taking, accessing credit from a digital lending platform. But also going back to Dennis, in Tanzania, I'm currently implementing a project, and it's called Gendered Alternative Credit Scoring Project. It's a project that ensures that across some specific value chains, where women are dominant, we are using alternative credit, we are using alternative data to ensure that we are building a credit score for the women. These women, majority of them, they've never opened a bank account. A lot of them have never, banked with a formal institutions, but they've always been very diligent when it comes to, supplying, produce to the off-taker, ensuring that, supplying, maybe dairy products to the cooperative where they are in. This alternative credits, alternative data is very, very important, and being able to incorporate it in a credit, incorporate it into a credit scorecard, and ensuring that financial institutions are picking this up. This is the experience that I have in Tanzania, but I don't know whether you have an experience of this in other markets in Africa, where you are actively using the alternative data and using it, incorporating it into the credit scorecard, which can be used for underserved segments. Have you seen this?
Yes, and in particular, when we talk about, alternative data can mean very different things, right? But I think one of the important things to keep in mind is that there's been a tendency, there's still a tendency to keep on using, if you are big, you are more credit worthy. We've been doing a lot of, we also do credit score assessment and reviews, and we've seen very often this bias in the credit scores that are being used that like bigger means more credit worthy, and that is a problem because number one, it's just wrong, and number two, it excludes by definition the small holders, and that's what we are talking about here, right? That's how do we get out from a situation where there is a high tendency for people using credit scores to confuse big and credit worthy. So the more you do, the more you buy, the more volume you have, doesn't mean that you have that more highest likelihood to repay a loan. So yeah, coming to your point, what we recommend and what we're seeing and what we implement is the idea of behavioral scoring. And that means that you are scored based on your actual behavior, not based on who you are or how big your turnover is. It will not exclude you because you are rural. It will not exclude you because you have been dealing with small amounts every day. It will just look at your level, how did you get ready for an upcoming payment? What did you do when cash was coming in? Or how regular are you? How much volatility is there and variance is there in your behavior along the way? Or you are very stable, and as you said, you've been very diligent in keeping that business steady, and even if it's not growing fast, at least we see it's growing and it's very predictable in the future. So I think we're talking alternative data. Yes, absolutely. Alternative data, and it allows us to include people who don't have a boring track record with a formal institution. But keep in mind that alternative data should really be scoring people about their behavior and not about how big they are or where they are or their demographic. Which sometimes will say, oh, we don't know anyone very remote woman who's doing this kind of business. We don't know enough of them to say she's credit worthy, so probably she's not, or we can't make a decision to say she's credit worthy. No, it's just unfair. So let's just gather this data and see how is this specific woman working and how has she been delivering dairy product in your case along the way. This is really a way to go and unlock this kind of population, definitely.
Thank you very much, Dennis. That is music to my ear. We cannot say we don't have data about an underserved segment. It's because we are not looking close enough. That is why we are saying we don't have the data. But we have 3 questions in the Q&A, and that's going to be the last set of questions for three of my speakers here. So, but I will start with Mr. Nwanze. And this question is from Bolaji, and it's such a fantastic question. What is the financial industry doing, or what can they do to lend responsibly such that we don't have a debt crisis that we see in other countries? Credit is good, but ultimately it is about doing business profitably and ethically. How is the financial sector, especially the MFIs, looking to grow a healthy credit ecosystem and not a debt sink that will ultimately lead to collapse? Mr. Nwanze, I'm giving you 1 minute for this to answer this question. Over to you.
Yeah, I think it's a very important question. I think first and foremost, financial institutions have to recognize the fact that there is a moral burden on us to lend responsibly. The objective can't be about money making or profitability. It becomes a disservice to the economy if we are lending carelessly. And in our organization, we place a strong emphasis on what we say that not only must you be able to live above the breadline, we will sometimes decline credit, especially when we see that your credit history shows that you're indebted to several financial institutions, not because we don't want to make money, but because it's not our objective to put you further in a financial hellhole. So I think the responsibility is on organization, and I think the central bank and the and regulatory bodies will also play a role in ensuring that we are all above board in that regard. Thank you.
Thank you, Mr. Nwanze, for answering the question succinctly. Mrs. Kolawole, there's a question for you because I think it's regulatory based. So I'm going to just direct that question to you. How do we address the ever increasing data privacy and security concerns with digital lending? Does this need central banks regulations, as most fintechs are profit-driven and not regulated in most markets? Over to you, 1 minute, please.
Okay, quickly, one of the challenges that we have with digital lending right now is issue of data privacy and these predatory practices of people calling people all over the place and putting their obituary and sending to all their relatives and all that because they have information on them. So regulatory wise now, we are not where we're supposed to be. But I think CBN is trying their best. I mean, Mr. Wednesday will talk about some of what they have to submit to central bank monthly, weekly, and all that. And I found out just yesterday that most of the fintechs are also register with the FCCPC, that's Federal Competition and Consumer Protection. So, I mean, with that coming up, I believe that FCCP, yeah, will actually really come up and on this. But regulation-wise, we're not where we're supposed to be. And I think the central bank is getting on top of this because this is the market that is growing right now. I read somewhere yesterday we have about 320 app for digital lending in Nigeria right now. So the big stick will have to be wielded as things are going. With FCCP involved with central bank, I think that will be sanity. Thank you.
Thank you so much, Mrs. Kolawale. You hit the nail on the head. A lot of people are falling into these debt traps and they've become stuck in it. And this is a question. There's a question. I don't think it's a question. It seems like a comment. Why conventional banks and microfinance banks are more interested in profits? By the way, they are in the business to make profits, by the way, than to contribute in social enterprises for women groups and farmers in rural communities. Because by not contributing in social business, financial inclusion will be difficult to achieve in rural communities in Nigeria. Yes, I agree. There's a lot of intentionality that has to go into ensuring that women-owned organizations, women-owned businesses are really supported by understanding the peculiarities that women-owned businesses face. But it has been such a great time. And thank you so much to my panelists that have answered the questions brilliantly and have given us recommendations, that have shared learnings from their work. And one thing that I want us to take away from today is the need for partnership. You know, Mrs. Kolawale mentioned about the great work that Credit Corps is doing. Mr. Nwaze mentioned about, you know, ensuring that credit gets into the hands of people across the federation. And also Ruby X shared experiences from Senegal, from other, you know, African markets. At the end of the day, what is very important is how are we leveraging partnerships, strategic partnerships, to ensure that we work together, we are able to you know, access cheap capital so that the on-lending can have, you know, cheaper interest rates. But it's really great to be here today and to be speaking with everyone. And thank you very much to Asion Microfinance Bank for organizing this much needed conversation on digital lending. And it is really amazing to be here with everyone. Thank you very much. And I'll hand over back to Paul. Paul, are you there?
Yes, thank you very much. That was an interesting session. And I'm pretty much sure our guests on the call are very happy with what they've heard, with what they've learned. And this panel attempted to answer the question, is digital lending truly expanding access to credit in the informal sector? I think that has been effectively dissected, effectively answered, and a broad range of insights provided on that as well. So I'll say big well done and thank you so much to the panelists. Many thanks to yourself, the moderator, Mr. Olulope Bajide, Gender Network Manager at FSD Africa. Many thanks to Dennis Manoite, Rubik CEO. Many thanks to Chukuma Wanze, Credit Direct MD and CEO. And also many thanks to Executive Director, Nigerian Consumer Credit Corporation, Ms. Olanike Kolawale. Thank you so much for sharing those industry insights. Thank you so much for sharing your wealth of knowledge, your wealth of information. I am very sure our audience have, gotten themselves loaded with information, and also the policymakers, the fintech innovators, the impact investors, and so many other microfinance institutions that we have represented on a session have gleaned from these insights that you have shared. Thank you so much once again. We'd like you to stay behind because we're still going to have a Q&A session where we have some questions that are still coming up, but we'll have to move to the second panel. And we'd like you to stay on so that when we take these questions, you'll be available to provide responses to them. So once again, thank you very much. We'll be moving to the second. Okay, we'll be moving to the second panel session. But before that, we would like to just have a photo ops with the panel one panelists. So we don't mind if you can just put on your videos and just stay on. And our team will just take a snapshot of all of you. So we have one more for Mrs. Tolulope. I think we have everybody's video on. We just still want yours, Ms. Tolulope. Are you still there? Okay, we have that of Dennis. We have that of Ms. Kolawole. We have that of Mr. Chukuma. Okay, Tolulope's video, it seems your video is on, is off. Can you turn it on, please, for a moment? Okay, thank you. Thank you. Thank you, Taiwo. All right. Okay, thank you very much. Thank you very much. And we'll be moving into the next session. All right, for the second panel session, we're going to be talking about the digital divide. And we're going to be answering the question, is transformation excluding the poor? We've talked about if digital lending is expanding credits to the informal sector. Now, this whole narrative about digital transformation, is it really excluding the poor? Are we building what they cannot use? We need to answer this question efficiently. I'd like to call on our panelists at this time. But before I do that, we'll take a quick video introduction. Studio, please.
Dr. Oluwatomi Eromosele is a development economist with over a decade of experience in economic development, financial inclusion, and job creation. She holds a doctorate from the University of Leeds and leads EFINA's Access to Financial Services A2F survey, the largest nationally representative demand-side market research in Nigeria. The A2F survey is the reference point for financial inclusion data in Nigeria, used by the Central Bank of Nigeria, CBN, to set policy benchmarks. Oluwatomi supports the CBN and other regulators in identifying policy reform opportunities, including frameworks for women's financial inclusion, micro-pension, and micro-insurance. She works with financial service providers to develop relevant products and supports donors in making informed program decisions. Her recent work focuses on financial health, agricultural financing, and women's economic empowerment, aiming to build a financial system that benefits low-income people and contributes to inclusive growth. Rukayat Bello is the founder and CEO of Regexta. She has BSc degree in Kwara State University, where she graduated as one of the best and respected students in the school. She is a member of Institute of Chartered Accountants of Nigeria, ICANN. She has over 6 years of experience in banking, auditing, and finance. She is very passionate about financial inclusion and keen in growing micro businesses. She is an alumni of Future Female Business School, Seed Stars, Village Capital, and many others. She is globally recognized by reputable institutions, including IFC, MasterCard Foundations, and World Bank for her efforts in driving financial inclusion in Africa. She has attended several training sessions in sales and marketing, business development, and strategy implementation. She also has exceptional skills in credit analysis, front-end engineering, and digital marketing. Mrs. DK Nene Ori is a seasoned trader and entrepreneur with over 30 years of experience in the retail industry. Based in Okearin Market, she specializes in children's clothing, shoes, and back-to-school items. Her dedication to quality and customer satisfaction has made her a trusted name in the market. Beyond her retail business, Mrs. DK is also a successful farmer, cultivating acres of farmland around Lagos. She has been a loyal customer of Axion Microfinance Bank since 2010, utilizing SME loans to expand her businesses and agricultural ventures. Mrs. Dika is a testament to the power of financial inclusion, demonstrating how access to credit can empower entrepreneurs and contribute to their success.
All right, thank you, studio. And once again, I'd like to make welcome the CEO of Register, Ms. Rukayat Bello. Welcome to the panel. Mrs. DK Nene Ori, a representative of the informal sector. Welcome to the panel. And also the General Manager, Research EFINA, Dr. Tomi Eromosele. Big welcome as well to the panel. This panel is a unique one because we've brought in people who know the data in the industry, and then people who interact directly, people who are at the forefront, people who are representatives of the informal sector. So these people are able to speak effectively to this conversation. And so we will dive in. So once again, welcome to the panelists. And for this session, I will be moderating it. So thank you once again. Now, we are attempting to look at the topic, the digital divide. And in the process, answering the question, is transformation excluding the poor? We'll start with Dr. Tomi Eromosele, General Manager, Research EFIN. And we want to address the first question. And that first question is, who is being left behind in the digital transformation? Are there groups or populations that are mostly at risk of being excluded by the digital transformation? And if that's the case, why? And what can we do to ensure that digital innovation is inclusive and equitable? Ladies and gentlemen, over to Dr. Tomi Eromosele. Thank you.
Good morning, good afternoon, everyone. And thank you, Paul. Thank you for the invitation. And I must say kudos to the management and the team for consistently driving these conversations year after year. I would say the panel before us have done excellently, an amazing job. I really enjoyed the session. And I would say that we must not get tired of talking about these issues and tackling some of these barriers they're really entrenched barriers, right? We're trying to solve. I mean, Dr. Martins went 60s, decades back, right? So these are challenges, structural systems that we're trying to address. And it will take us a while, but we are surely getting there. I will jump right into the question. I think it's an interesting one. The digital divide, this transformation excluding the poor and who is left behind. So permit me to approach this from evidence, right? A lot of people have spoken about EFINA's access to financial service survey, data, and I will draw from what we've observed from the data and also what we've heard from Nigerians just going across the 36 states and the FCT. First, when we look at exclusion from formal financial services, we know that individuals with low income and low education are more likely to be excluded. When we look at our society, and we just think, who are those people who are likely to have low income or low education? We know that and data shows that they're likely to be women, young Nigerians, farmers, those in northern or rural communities. And Dr. Martin spoke about how growing uptake in digital financial services is extending access to finance for some of these underserved communities. there is no question that DFS, or the digital transformation, as the question says, has extended uptake for the underserved and also deepened usage. Because when you ask people around what would encourage you to use a service, what do you want? They talk about convenience, ease of access, and digital really helps us to drive that, even for those who are banked already, right? And then we also know the 8/12/2023 survey tells us that financial service agents, for example, have been able to extend access to finance to about 11 million Nigerians who typically don't have a bank account or a wallet, have no business really with the formal financial system, but through financial service agents who are enabled either by mobile technology or some infrastructure, are able to access formal financial services. Then we come to our specific question, which is, yes, we know that DFS is driving access or usage, but I think the question is, are there segments of the population that are being left behind or excluded? I will take two segments. I will look at rural exclusion, right, from formal financial services. What we see from the data is that the growth in mobile money usage in rural areas, so by the rural population, outweighed the growth in urban areas. And that's logical, and that's what technology should do, because I think someone said earlier on that in rural communities, they're really the absence of mortal institutions, right? So it then makes sense that in these rural communities, digital financial services looks like their only option, and agents have been able to help us drive that. So it demonstrates the potential of financial service agents and digital in bridging the financial access gap in rural communities. But then when we look at the gender gap, we see some kind of a contrast. When we look at the gender gap in mobile money usage compared to the gender gap in the use of traditional financial institutions like commercial banks, we see that there is about a 3 to 4% increase in the gender gap, in the uptake of financial service agents and mobile money. What that tells us is that, yes, digital financial services currently expands access to men and women, and also like we saw in rural communities, but then the growth in uptake is higher for men compared to women. And so if we're not careful, yes, DFS is increasing access, but it's, in a sense, particularly on the gender side, widening the gender gap in terms of access to digital. And so what does that mean for us? It then means that digital must then be accompanied with an acknowledgement of structural barriers that certain segments of the population face, right? And so we need to strengthen the connections and the pathways to impact for these segments of the population so that we ensure that we're creating equitable access to formal financial services. You spoke specifically to demographics. For example, rural communities are likely to lack access to reliable internet. Yes, there might be network, but then how reliable is it? We also know that low-income populations often cannot afford smartphones. I'm happy to hear Chukuma speak earlier around the growing use of USSD to drive credit uptake. We also know that women in northern Nigeria, for example, face cultural and systemic barriers that limit access to digital tools. I think Chukuma also spoke about his mom sending messages. But again, when we look at elderly Nigerians, they're likely to have low levels of literacy and more likely to struggle to navigate digital platforms safely. So we see them using it. And I would say my mom as well, the older they get, you see them a lot on their phones. But the question is that how safe are the platforms? So several data points we have to demonstrate the fact that digital financial services extending access and uptake. However, our message is that DFS is the pathway to ensuring that all Nigerians are financially included and empowered, but digital in itself is not enough. It must recognize structural inequities and design to address those structural inequities and ensure that the platforms that people have access to are inclusive. They're designed to be inclusive. I think Tolulope also spoke about that as well. So for example, I'm also happy to hear some of the Axion jingles in other languages, but how well are our solutions designed, to even capture other languages, because we know literacy levels are low. So again, digital great, but it must recognize structural barriers for different segments that are likely to be excluded. Thank you.
Thank you, Dr. Tomi. You raised an important point when you spoke, as a spin-off from your comment, that you see the gap between the male and female in terms of adoption. So could that be a behavioral issue? What exactly is driving that?
Thank you very much. So two things. We know that in our society today, and Tolulope is we expert here. We know that women have less access to things that enable financial inclusion or uptake of even digital financial services. Educational levels, literacy levels, women are on the lower side, right? And so if we don't address those structural issues, we are likely to have them more excluded. Behavioral factors, I agree, but sometimes those behavioral factors are driven by underlying structural barriers as well. So a woman is less likely to be, again, formally employed. So if you're designing for formal, for example, I think Tolu mentioned how some credit worthiness algorithms are not yet designed to acknowledge informal income sources. If you're not designing from that angle, then you say that, oh, they don't want to be part of the system, but that's not the whole picture of it. It's about recognizing those structural inequities. And this is not just about women, it's about the various segments of excluded population and then designing to include them. Thank you.
Thank you very much, Dr. Tomi. And so we'll move to Mrs. Dike. Mrs. Dike, you are a representative of farmers and traders. You know the ground work, the ground level at Okeari, right? And this is where we have a lot of micro entrepreneurs, that we are even targeting as far as financial inclusion is concerned. The question is, based on what you see today as a reality, are all these digital lending platforms, these digital tools, this digital transformation we're talking about, are you really seeing it make impact? Is it delivering value to you? And you speaking for even other people who are also traders and farmers, are you getting value from the digital transformation? Is it affordable? Is it accessible? Do you think we are even giving you the right solution as microfinance institutions? And what do you think we need to do that is not being done? Or what government needs to do, or what private sector players need to do, or even NGOs? Over to you, Mrs. Dike. Okay. You are on mute. Can you unmute the microphone?
I've unmuted myself.
Okay. Please go ahead. You may also want to put on your video if you don't mind.
That's part of
Okay.
That's part of what I'm about to speak. I don't even know what
Okay.
to put.
Okay.
I'm looking for my video on my phone. That's part of the problem we're having.
Obviously.
I'm looking for where to put on my video.
Just look for the camera button somewhere at the bottom. It was on before.
Okay. You're seeing the camera. Jesus. I'm not even seeing the camera on my phone.
Okay, it's fine. No worries. We can just go ahead. Yes, please. Thank you.
Yeah, it's part of the problem we're having, illiteracy. Not all of us knows, we might be literate, but not all of us knows how to operate our phones to get all these things done. So it's a big problem, it's a big challenge to us in that market. Not all of us go to school, most of us are illiterates. in the market there. When you are talking about going digital, we have issues. Like when you asked us to sign online, we won't be able to do that because we don't know how to do it. I am supposed to set up my background. I don't know how to do that. I'm not an illiterate. I'm a literate person, but all these pressing of my phone, I don't know how to do them. If I just do my WhatsApp, I have my Zoom meeting, but to come and do all those other rigorous ones, we are unable to do them. So when you are going digital, we need like a form of training. Do seminars, call these women, moreover women, all those women, both young, most of them, they don't go to school. We're not literate. Call them, give them training on this digital. Train them on how to operate our phones, on how to make use of our phones, so that anything you're teaching us, anything that you want us to do, we'll be able to do them. Not coming to your office, climbing up and down, stressing yourself, but we can be able to operate with our phones in our hands. But because we don't know anything about it, we won't be able to do them. So when you are telling us about digital, one, we are scared because of the scamming, everything. They will ask you, if anybody send you anything, don't click, so they will not scam you. So we are always afraid, we are scared. All this grammar, all of you have spoken from morning till now, we don't know it because some of this, your DFS, this, we don't know the meaning. We don't know anything about it. So give us training, train us, make us understand what is called digital financing. If you train us, we will learn. See, I'm talking to you, others show their pictures. I'm not able to see my camera or to see where to press to be able to do what others are doing. I'm not doing it. Do you understand me? Sometimes it's my own carelessness, not that if I go through it, I won't be able to. But as we are speaking, I'm just telling you of what is going on in Idumota. I'm at Idumota, not Okari. I'm at Dosumu Street, to be precise, and I deal on underwears, both male, female, adult, kids. That's my business. I've been in that for over 20 years. I'm a farmer. I do my farming. Just the other day, I installed camera to enable me stop the theft in my farm. These are all digital stuffs. I never knew about them until I was robbed the other 2 weeks ago. So all these things need you people. As we have been your customer for over 10 years, I've been with Action. Action has done a lot for me. I've expanded my business through Action. I started borrowing from Action when I collected 800,000. From 800,000, I can collect up to 10 million and I pay them back. But give us training, empower us by your training, to enable us follow you and know what is called digital financing. As of now, we don't know anything called digital financing because we are scared of this, your digital financing. Today, somebody will tell us to click. When we now click, they'll wipe our accounts. Another day, another person will tell us this. Tomorrow, problem. So train us so that we'll be able to know what you people are doing in this digital financing. We don't know what you people, all the grammar you people have spoken from morning till this time. I could cram some of DSF. This one is speaking about this, but the issue is give us the appropriate training, probably street by street. Call all the market women on this street this week, give them training, or even on Zoom, tell us, you put a board, show us how we'll be able to do all these things. We'll be able to do it. So we'll join you fully on this digital financing. I think
Thank you very much. Thank you very much. You have raised very interesting parts of the conversation, and you've touched on some of the areas where we're really excited with the feedback that has come from you. And you can see there are a lot of people clapping for you on the on the session. So thank you for that. But one of the things you've highlighted is that you are ready to embrace digital transformation, but there's the fear of accepting it. You are ready to embrace it, but there's the fear of accepting it because of what you people have been informed. Don't click this. So if they say do this, they will wipe your account and all that. So there's fear. And then you mentioned digital financial literacy, meaning we need to teach you, you need to be taught these technologies. It is not just to give you the technology, it's also to teach you how to use the technology. So I'm very sure that microfinance institutions on the call, they have noted this feedback from you. And I'm very sure every organization will make sure that this is done. The federal government has been pushing, even the central bank have been pushing heavily on digital financial literacy. And I think that we'll just have to step things up and do better and do much more than we are doing. But these insights are very profound. And thank you very much for that.
Thank you.
Next question we'll go to, thank you. We'll go to Ms. Rukayat Bello. And Ms. Rukayat Bello's organization interacts with those at the bottom of the pyramid, okay? Just like most microfinance institutions. Based on Mrs. Dike's feedback and comments, how do you, or how can digital lenders build trust and transparency with underserved populations while still maintaining compliance with regulations? You see her concerns, you see her worries, there's the willingness to accept the technology, but there's fear to adopt the technology. So how can digital lenders and in general microfinance institutions build that trust and transparency with these underserved populations so that they can not only desire the technology, accept the technology, adopt the technology? And what do you think are the risks of not addressing these issues? Over to you, Ms. Rukaya.
Good morning, everyone. And I'm so sorry, don't mind my voice. You know, it's the doesn't mean I don't have to go. So I just the invitation. To be candid, when somebody saw the flyer that I posted and the person said, oh, you are going places, ASEAN Bank invited you to, so it's a privilege for me and my team. So I want to say thank you so much. We appreciate this and we'll never take it for granted. So going by your question, now I want to talk to Mrs. DK. I call them, my people. They are our mommies in the market. So these are the people we target. We target the people that are even below Mrs. DK. We give loans, from 30,000 naira and maximum of 300,000 naira. To answer that question, there are two things we are currently doing in Register that is paving way for us. Number one is agency banking. We know our customers to be semi-illiterate. They are uneducated. They may be able to use smartphones, but they can't, use it to some extent. And that's where agency banking, comes in place. So we have agents that are intermediaries between the register and the customers. We have agents whom we've trained, we've imparted the training to them. They are now the ones to train their customers on digital, digital financing. Now on our platform, there is something we call bookkeeping. Our customers, they don't know what bookkeeping is all about. But with the help of our agents, they now know what the bookkeeping is all about. To the extent that if our customers are making loss, the agents are able to tell them, oh, Madam DK, because of the expenses that you incurred yesterday, you now made this loss. If you look at it, they begin to understand to say, why am I making loss? They know that if they are making profit consecutively, Register is going to reward them, even if it's very small. So we've made them realize that if you are making losses, it's going to affect your business. Not just your business, it's going to affect you, and you may not get that money. Probably you are looking to get 100K in Register. We may not give you that 100K. We may rather give you 50K because we now believe that you don't know how to manage your finances. So community banking makes a whole lot of sense. Agency banking. So they are the ones to tell them, we do financial literacy with these agents. So for me, and something that is working for Register is agency banking. So they are the ones to tell them, do this, don't do this, and even advise them. So we pride ourselves in saying that we are like a typical VC firm that provides pre and post investment support services to these people. We are not just giving them loans and keep quiet. We monitor their growth. We see where lapses is coming in. We see where they need help. We see where we are to come in. So we see them on a daily basis. So agency banking is suitable, for us to tackle this challenge. And there is something we also want to put out very soon. Over 50% of our agents are our customers' children. I don't know if that makes sense, over 50% of our agents are our customers' children. So it's about community banking. There is nothing you want to do, for the market women, the underserved, that you won't talk about community banking. We are intentional about it, and that's why agency and community banking are something we really see, and is paving way, for us. So Mrs. DK is our person, and for Mrs. DK to be digitally exposed, we use someone who is in our community. We call them financial ambassador, to train Mrs. DK on how to be financially, literate. Thank you so much, if I've answered the question.
Thank you very much, Ms. Rukaya Bello. There's just a follow-up question on that. You mentioned the use of agents, what exactly are these agents expected to do? Is it to take POS terminals to them and train them on how to use the POS terminals, or to educate them on the core of financial literacy, which is around bookkeeping? You also have things around bookkeeping, you have things around budgeting, you have things around financial planning generally. Okay, you have things around savings, you have things around investments and all. What exactly can these agents cover at their level?
All right, so we have different kind of financial products and services. Number one is the account opening. So our agents can meet anyone, anywhere, and open accounts in less than 1 minute, and that person gets account number, which money can be transferred in, and money can be transferred out. Use of services, mass cannot do that. That's using agency. So it is the agents are using, downloading our mobile app. So they open account for all customers they are seeing, on the go. So after account opening, customers can say they want loan or they want savings. So if customer is saving, they get to see alerts on a daily basis to say, I've contributed 100 naira today, tomorrow is making it 200 naira. And if customer need loan, still less than 1 minute, the agent is able to apply for loan. And if the customer is a new customer, in 3 hours the customer gets the loan because of KYC. And if the customer is an existing customer, then within 5 to 10 minutes the customer gets the loan. So that is what the agents are doing. They open accounts, they apply loan, they put customer savings in there, and they also monitor the growth of micro businesses, in terms of the booming financial literacy that I've spoken about. So those are the things they do. Thank you.
All right, thank you once again, Ms. Rukayat. And we'll go back to Dr. Tomi this time. It's been quite interesting. For Dr. Tomi, the next question will be, measuring success in digital lending. There's a whole plethora of digital lending apps and platforms around the country, right? And we are also seeing some of them becoming even more predatory, even in the approach to lending. And the underserved that we're supposed to meet, it more looks like we're feeding on them as against helping them to come up higher economically. And so how do we attribute success to this? And the question is, what key metrics should investors, regulators, and NGOs use to evaluate success in the digital lending space? Is it really hitting the desired mark? Is it really achieving the desired goals? And then how can shareholders or stakeholders align on a shared vision for sustainable growth in the sector?
Thank you.
Over to you. Okay.
Great conversations. I'm happy that the panelists have expanded on the findings around the gender gap, but also the fact that there are structural barriers that women face. For example, literacy has been spoken about. In terms of how should we measure success, if I go back to what I think Mrs. Dickey is talking about, is she doesn't just want to have access to these solutions. She wants to be able to use them in a way that impacts her businesses, right? So if we keep looking at access, and I think this is even from a national point of view, because if you go back to look at our national financial inclusion indicators, they all talk about people having access to using. And I think we need to move beyond that to then talk about the quality of the usage, and also the impact of the usage. If she has access to it, but she's not able to use it in a way that is safe and secure and impact her business. And I also love the fact that Rukaya talked about the children, not just her business, but she has a livelihood, she has, a household. She has aspirations for her children. So I think that we need to start to think about this from a sustainability point of view, both financial, which Tolu mentioned earlier, but also social and economic sustainability. I love the fact that I think it was Chukuma who said earlier on that giving out loans that are not secure or that do not drive impact is a disservice both to the customer and to the nation at large. So I think that an impact mindset in how we measure, the success of what we're doing is how we should approach this, both as an institution, but also from a national approach to how we do this. We all know that in Nigeria today, we say we have a trillion, we want to go after $1 trillion economy, right? Because we are saying that we don't have enough to even take care of our economy. But the truth is that for us to get there, we need Nigerians to be financially included, but also economically empowered to both contribute to and benefit, from the system. So how we get to that empowerment is through solutions that are impact driven. I also love, I think kudos to Axion. She said how she started from borrowing 800,000 to now even being able to take up to 10 million. That is great success. But beyond the just the size of the loan, being able to document the impacts that the loan has had on the business and on the household, I think is how we begin to measure the impact and look at success, not just from a solution point of view or from a product point of view, but from a solution and quality point of view. Thank you.
Thank you very much, Dr. Tomi. You touched on something very, very important, and that's what's the point of putting a solution out there that people don't want to use or that they can't even use. And so still from that research point of view, for organizations, microfinance institutions that create this kind of products, for them, what do you think they should look more deeper into when it comes to product development, so that we're not creating products that people cannot use, and instead of including them, then we're excluding them? What are your thoughts?
Thank you. I think that we need to design with the user in mind and put the user at the center of the solution, so that I'm not just designing maybe even when you look at even women segments, I'm not just designing for women. I'm designing maybe for an agriculture, for a farmer, for a smallholder farmer, or I'm designing specifically for a market woman, or I'm designing specifically for a young parent with kids. So that approach, and I think I've heard a couple of that even in the jingles that was shown. I think microfinance, we do this to an extent because we have that social approach to what we do. I think that we need to do more of that, but we also need to enable systemic, changes that can help even the upcoming institutions to do this better. We know that we have so many institutions who are not as big as ASEAN, and the issue then is, while ASEAN might be able to do this very well, others might struggle in terms of chasing after the financial sustainability and then trying to keep up with the social aspects. Maybe we need to build up infrastructure, network, just that can help the ecosystem as a whole to take this thinking in terms of how we solve for the financial inclusion problem, that we're not just creating solutions, like you said, we're trying to meet needs. And so we need to put those people at the center of what we're designing. Thank you.
Thank you very much. Very profound. So we'll go back to Mrs. DK again now. And so, Mrs. DK, we have reports that is telling us, oh, there's smartphone penetration. More of people like you are not getting smartphone. I mean, you're no longer using the Palasa phone or the type we call Palasa, or, that phone that you cannot use to browse the internet. That people in the informal sector are coming up higher. They are not able to buy Samsung. They are not able to buy Techno. They are not able to buy Infinix and all those kind of phones. With this, is this a reality today in the market? Are you people really actually buying this kind of phones? And if you are buying them, are you people able to use them? Because most of the digital solutions that will be delivered on and be accessible through those kind of devices. What we want to establish is, do you really need those devices? Or we should go the other way and continue to use what will be possible on the type of phones that you people or people that are in your kind of business area have always used, which is the phones that don't use internet, but you can just dial a code. What do you think is still better for you today? I know Ms. Rukaya touched on agency banking, but if there is no agent and you want to do it yourself, which option do you think was for you? Are you happy to get a smartphone and get trained on the smartphone, and then you can use the higher digital service? So we want to know your mind and your thoughts and what you see happening today. Are these people really getting all these smartphones? Please, you can, the floor is yours. Okay, I've prompted you to unmute so that we can hear you. Prompted you from here to unmute. You should see a button on your screen saying unmute.
That.
Just click it. Okay, we can hear you now.
Okay. I keep my records. That doesn't mean I don't keep record. I have my smartphone. I keep record. I have my records. Every daily sales is recorded. But we are talking about this doing everything on the phone. Do you understand? I'm talking about doing everything on the phone. I keep all my records, both the banking, everything, sales of the day, sales of the week, sales of the month. We keep records manually. Do you understand? With our book, we have record books. That doesn't mean that we don't keep record. We are talking about this digital financing of me. I don't like using my phone to do transfer to somebody. I go to bank to do that. That is the problem. So we are looking at a way we could be trained with our smartphones to be doing all these things, because we're scared. When you ask us to click this and you are being told any clicking can lead you into you losing all your money. So inside us, we are afraid in all this click. Even my children, they wanted to teach me how to. I say, I don't want to. Let me make use of my checks. Let me go to bank and do transfers. And that's the way I do it. But that doesn't mean I don't know what I'm doing. I'm not keeping record of all the things I'm doing. No, we keep record. But only that we are not doing it with our smartphones. We're making use of our phones. I use my smartphone to send messages to my customers abroad, and I interact with them with these same smartphones. But the issue is, if our, like Axiom, can be having seminars once in a while, telling all these women, gather them together, teach them this clicking of a thing, unless it's so and so. If it's from us, confirm from us, show us, we will show you, direct you on how to do it. We will be able to do it and ascertain it. Most of us keep record. Not everybody is an illiterate. Even those illiterates, they are trying to record. They keep record of their sales too, manually, not doing with our phones. Do you understand? That is my own problem. And I feel it's the same thing with every other person. You ask that person to click here. You ask, sometimes we will feel that even Axiom might impose some extra charges to us by all this clicking. So give us the courage, train us, Make us know more about using our phone to do all digital. That doesn't mean that we're not keeping our records. Train us, because we are part of you and you are part of us. Enlighten us in all this. Me, I refuse to learn how to do transfer, even to buy a recharge card from my own phone. I don't do it. I'll go and look for, I'll call my children, send me recharge card, call my manager, send me, but do it by myself. I'll tell you no, because most times I lose my phone. And once I tried doing that, when I did the first time, I lost my phone. I lost so much money when I lost that phone. I didn't know how the person penetrated into my account, and I lost so much money. I refuse to do that again. If you ask me to click, I will not click. Oh, even this seminar, I had to ask them, how do you say I should click? This one is you people. I don't know any other person. Before I click, only Zoom that we just do meeting and I'll leave. But those other financial rigorous ones that will enable us to do the main financial thing, don't call me, I'm not doing. So if you give us the courage and train us about it, okay, we'll do more than that. We are doing well with what we are doing, but that doesn't mean that we are stark illiterate, that somebody will come and tell you, I know how much I make in a day from my sales. It's there. You balance your account, you send to me, and if I'm not there, the same thing everywhere. So I don't know whether I've answered you the question you asked me, or I went into another.
You have. No, you have. It's fine. So one thing is clear. You have these phones, you have these smartphones, but there's an issue of, yes. So you people have these phones, you people have these devices, but there's a major issue which you have identified, and it's an issue of trust. There's a serious trust issue in the informal sector, and we need to solve that problem. We need to deal with that trust issue. And so I'll take this and, pivot it to Ms. Rukayat. Beyond, using it. Okay, sorry, I think there was a bit of freeze. Let me take that again. So, Ms. Rukayat, I was saying we have identified from this conversation that there's a major trust issue in the informal sector.
Oh, you're muted.
Okay, thank you, Mr. Eddie. Can you hear me? Can I get feedback?
Yes, it's loud and clear.
Okay, thank you. All right, so back to it. Apologies for the glitch. Like I said, we have identified a major trust issue here. And this is because of what has prevailed in the informal sector. We have people, fraudulent people who have come in and who have behaved in a certain way that has created this distrust. And so for Ms. Rukayat, the question is, what are the risks of not addressing this trust issue? How do we even address this trust issue, and how can they be mitigated?
All right, thank you so much for the question. And I will go back to Mrs. DK. Mrs. DK has been saying that she needed to understand how to use smartphones for probably her financials or for something else. Now, this is not Mrs. DK we have thousands of Mrs. DK in the market. And we are not talking about agency now, because for me, I believe if we have agents in the market that can impart the knowledge to Mrs. DK and the rest, it makes a lot of sense. But for us to now gain Mrs. DK's trust and others, it is now for us to bring in Mrs. DK as an ambassador of Action, train her, and then let her train others. That way, they trust Mrs. DK even more than Action. I don't know if you understand. So we are now targeting something like Mrs. DK and not the agents now, because Mrs. DK speaks their language. Mrs. DK understands their needs. Mrs. DK knows what they want. We are now bringing Mrs. DK into a member of Action to be an ambassador of Idumota community and train our fellow marketers on how to use mobile app. I don't know if I'm making any sense. So we need to bring Mrs. DK in to train the rest.
Yes, you make sense.
Yeah. And if we did not do this, we are talking about digital. I remembered when I was in the, when I was working in a particular bank, I'm not going to mention name, and we were struggling, getting even up to 1,000 customers, and that's because they were doing it manually. Right? And you will see staff stealing this and that, because there was no digital solution. Now, going by my own company, using myself as an example, in 2021, when we started, we didn't start, like a digital company. We also started manually. We wanted to test run, wanted to see if there's going to be validation or not. And when we started, we were also struggling to manage, 3,000 customers, because it was Google Sheets and Google Form. Immediately we finished building our technology, in less than 6 months, we had about 12,000 customers. So this is the power of technology. This is the power of digital. I said something, last week, that if customer did not pay for 1 day, with the system that we've built, we are going to know. If customer did not pay for 2 days, these are the system that is making us scale very fast and making us curb, to say we don't want this, this is what we want. So if we don't embrace digital, financial illiteracy is going to keep going, and they will keep passing it to their younger generations to come. So we need to train these people so that they can be financial literate, and the younger generations can also learn from them. And if there is no digital transformation, there will be a lot of unemployment. People, because it's digital, that's why we are bringing in agents, to give them job. If there is no digital transformation, or we are not embracing, digital whatever, there will be a lot of unemployment, which can lead to criminal activities, so many absurd activities in the industry or in the economy. So we need to be, to be digitally active for us to solve all these, I don't want to say nonsense that is happening in the economy. So I think I've answered the question to my best of knowledge. Thank you.
Yes, thank you. Thank you very much. Thank you, Ms. Rukayat. You bring an interesting perspective in terms of how this solution should be solved. Thank you very much for those insights. And I'll go to Dr. Tomi for one last question, and that's, we've been able to identify that it seems like there's serious sabotage by those who engage in fraudulent activities that has created this mistrust and is sabotaging the digital transformation efforts. They like the idea in the informal sector, they welcome the idea in the informal sector, but they are afraid to accept it. So, looking at things from a policy perspective, what role should government, private sector players play in dealing with this trust issue that we now have today? Because microfinance banks can try, but with government support, make it better. With government support, make it easier. With policy in terms of what we do in product development, help improve on this. How do we deal with this trust issue? Over to you, Dr. Tomi.
Thank you very much. And I think that this is even more important because when you talk about the business of finance, everything is based on trust. Trust from the customer who wants to trust the system, but also trust from the provider who wants to have enough information about the customer to trust who the customer is. And I think you're right. We need to a couple of things. One is that we need a strong system that is safe and secure, right? That goes from regulation that must ensure, right, KYC is in place, that must ensure that the institutions themselves have the right infrastructure that can protect data, avoid whatever breaches as much as possible. Dr. Martins talked about the recent loss, I think it was the Central Bank of Uganda, she said. And then we've also known that in our system as well, we have financial institutions who have lost a lot of money in the last couple of years. So we need a system that is safe and secure, and that is a regulatory, and I would even say not just financial regulatory, it's the financial ecosystem in Nigeria sits within the Nigerian system. So if we don't have, for example, right data in the society as a whole, we're not in isolation, right? So it's a national issue that we need to address. The second thing is we also need to empower the users, empower Nigerians. And that's why at EFINA, one of the things that we're doing the next couple of years is we have an initiative called Inclusion for All, but it is actually designed to strengthen the voice and the capacity of the users, of the demand side users themselves, right? How do we educate them and empower them to be able to make right decisions? So digital literacy, knowing data privacy issues, and things like that. So I think it's on both sides. And then we also need the supply side that must be strong actors in this place, or private sector actors who must be strong actors and who must advocate for this consumer protection issue. I think we've talked about it a lot, but maybe we need to, again, go back to setting those consumer protection practices and having providers really sign up to an enabling system that ensures security. I would just end by saying that in this whole system around information and trust, I think Chukuma mentioned it earlier on. In other countries, what they've tried to do is to ensure, that their digital identity system is as robust as possible. One of the reasons why we have high fraud is that you really don't know who is who in Nigeria, right? The bankers themselves, the fintechs, don't know how or have robust information to know who is doing what, and able to track maybe post the loss or whatever. So today we have our national identity number covering over 100 million people. We have BVN over 70 million, today. So I think we need to find a way to ensure that our digital public infrastructure is robust and safe. So that is a government responsibility, but also a collaborative effort. Government, the institutions, the regulators, but also we, the people, must be willing to come on board to work together to achieve this. Thank you.
Thank you so much, Dr. Tomi. Excuse me. And thank you to the panelists. Thank you to Ms. Rukayat Bello. Thank you to Mrs. DK. And we're grateful for the time you spent on this session. We appreciate the insights. And we believe that all key stakeholders who are on this call have gleaned from this. And I'm sure the industry will take this feedback and do something proactively about it. Thank you so much. And please, could you just leave your video on for a minute for photo ops? And we'll be going now into the QA session. We'll have our audience just ask a few questions. We'll take a few questions and then we'll be wrapping up for the day. So please just leave your video on and we'll have the photo ops in just 1 minute. Okay, that's almost done. All right, thank you very much once again, ladies and gentlemen. Please let's appreciate our two panelists. Thank you so much for your time. Now we'll go into the QA session. We have a number of questions. We might not be able to take all of them, but we'll do as much as possible. And I'll just read through some of the questions, and then I'll call on any of our panelists in panel 1 or 2 to take the session. One feedback from Fumilayo Elebe is, this is a typical example here. Mrs. DK, you are awesome for coming to this program. Thank you so much. That is someone saying kudos to you. I think you've spoken the minds of many. And we have a question from Rose Ochiga saying, how can those in the rural areas build trust on digital lending? Because most of them are used to traditional lending. Mrs. DK is a perfect example of those that want to build trust but scared to. I think we've exhaustively dealt with that as the panelists spoke. I think Dr. Tomi addressed that, and also Ms. Rukayat also addressed that as well. So I'm sure your question is already answered. Another question here from Bolaji is, what's the financial industry doing, or what can they do to lead responsibly such that we don't have debt crisis like we see in other countries? Credit is good, but ultimately it's about doing business profitably and ethically. How can the finance sector, especially MFI, looking to grow a healthy credit ecosystem and not a debt sink that will ultimately lead to collapse? I would like to direct this question to Mr. Chukuma Wanze, if you're still on the call. Mr. Chukuma, are you able to take this question? Okay. Okay, we'll move to another panelist, and let me see what is the financial industry doing, or what can they do to lend responsibly? So I'll direct this question to Ms. Rukayat Bello. Ms. Rukayat Bello, can you provide a response to this? What is the financial industry doing, or what can they do to lend responsibly so that we don't have debt crisis like we see in other countries?
All right. In register today, we have our rules and regulation. Like I used to tell the agents, the account officers, remember, this is not your father's money. So you are only giving out money to those who are actively in business. Can you hear me?
Yes, we can. Please go ahead.
Okay, thank you. So if you lend with emotions, that's when you have bad loans. But if you don't lend with emotions, some of the agents, some of them, when they started at first, they see, oh, she's begging me. She said I should give her money. So that's not the rules. Is she into any business? Is she doing any business? So don't lend with emotions. If the person is actually active in business, there are things we check. There are 5 C's that we check in register and even outside register. Is the customer capable of paying back? Does the customer have the credit worthiness? Does the customer have the goods? You understand? We have credit, capacity, character, collateral, and I've forgotten, but we have 5 C's. So those are the things that we look at to say, okay, are you worthy to get loan from us or not? But basically what we look at is, are you into business? We have so many, small girls now that have given birth and they are not doing anything, but they tend to come and borrow loan. That's because they felt maybe you are giving loans for free. But you look at them to say, okay, because you are not in any business, I may not be able to lend you the money because you don't have anything you are actively doing. So we don't lend with, emotions. We lend using the rules and regulations of register. And the interest rate is actually very small. If the interest rate of any bank is quite enormous, there is tendency that a lot of people will default. So all these things put together, if we do it, we are not going to have bad people or having bad credit history or people defaulting. So I would say we don't lend with emotions. You are in business, we want to give you money. You have the character, you have the capacity, you have the, even though the loan we give is uncollateralized, though we don't collect collateral, but we still look at some things, the stock value. Okay, this is where you belong to. You didn't give us BVN, this is the amount we can give you. So many, measures that we put in place to say, okay, this is what you deserve to get this amount from us. Yeah, thank you.
Thank you very much. Thank you very much, Ms. Rukayat. I'll direct the next question to Dr. Tomi, and this is from Gift Mahubo. And the question is, how do we address the ever-increasing data privacy and security concerns with digital lending? Does this need central bank regulations, as most fintechs are profit-driven and non-regulated in most markets? Let me take that question again. How do we address the ever-increasing data privacy and security concerns with digital lending? Does this need central bank regulations, as most fintechs are profit-driven and not regulated in most markets? Dr. Tomi, if you don't mind, this question.
Hi, Paul. I think Mrs. Olanike might have answered this earlier on. But I would, yeah, I think she mentioned that the CBN is looking into this and how.
The mapping of NIN.
Yes, so that has been addressed.
Yes.
I don't
Okay.
want to, yeah.
Okay. Yeah. All right. Thank you. Okay. So, Mr. Gibbs, this has been addressed. So we'll move on to another question from Innocent Okechukwu. And I would direct this question to if Ms. Olanika is still on the call. Ms. Olanika, are you still on the call? Are you
Yes,
still
I'm
on the
on the
session?
call.
Okay.
I'm on the
Thank you.
call.
Okay, thank you very much. So there's this concern raised by someone, Innocent Okechukwu. He's saying, my concern is on the traditional versus digital lending. Is it really possible that digital lending can replace traditional lending in its entirety when compared to the illiteracy and poor tech savvy state of rural dwellers? So the question is, can digital lending replace traditional lending? Is that even possible? Over to you,
I think,
Ms. Olanike.
yes, we're talking about the gap that we have as a country. If we're going to talk about consumer loan really as a driver of the economy, we should have like 50% of the GDP to be on consumer loan, and the gap is huge right now. So if we're going to scale, it has to be digital. And I was very happy one of the participants, the MD of Credit Direct, said right now, 2 in 3 loans they have are on USSD. So even the rural, the digital illiterate that you are talking about are actually coming up. We saw what happened last year, 2023, when everything went haywire. People were opening accounts, and that's where the fintechs came in, and they were able to cover that gap so fast. People were having account with many of the fintechs, and at the end of the day, some of them who are not so literate, who are afraid of mobile, they will use card and go to agent location. And the agent really tried. Dr. Martin said the agency banking has grown by 250% even against last year. So that means we're actually moving. So, but a lot of literacy campaign is going on. We're not where we're supposed to be, but it's also still going on to continue to train people and all that. But if 2 to 3 loans are on USSD, that means even the digital, not so savvy are already coming up. And some of the apps that they have, there's a way that some of them are so simple for even not so literate can actually go through. It's just a thing of the mind. Do you understand? And now we have almost over 200 million phones. That means everybody to an extent, apart from call, can do simple things. So if we're going to scale, digital lending is the way to go. But it may not totally replace for the digitally not so savvy, but we're moving really fast. And it's important for scaling.
Thank you.
Thank you.
Thank you. Thank you very much, Ms. Olanike. Thank you so much for that. I'd also like to point this to our keynote speaker to also share a bit of more insights on this traditional, being someone who has sat as a policymaker, and based on what you see, in terms of this traditional and digital, and still, on the bearing of this on this question, and just building on the comment by Ms. Olanike. What are your thoughts about it? In terms of how we balance this and one replacing the other, or they being complementary to the other, from the way regulatory is looking at it. I'd like to call on our keynote speaker, Dr. Tokunbo Martins. Dr. Tokunbo Martins. Okay.
Yeah. Thank you very much, Paul.
Okay.
I support what the last speaker said on Olanike Kolawole. If the DFS has grown by so much, or if let's go back to what I said before, that financial inclusion has grown rapidly from 38% to 64%, where we are right now, and it's driven mainly by DFS. And agency banking alone has grown by 250%. Then it stands to reason that what we need to do is to increase the lending aspect of it. Lending is just one service. Saving is another service. If saving could be 38%, and that is not enough, why can't lending be the same 38% or more? So I believe that is the way to go, but it will be a gradual process. I mean, credit had been flat for so many years, so it's even good to see that it has doubled within the last 3 years, from 3% to 6%. But one thing I want to add, in addition to the trust issue, is that because I was not by banking now, I was recently hacked. My Uber account was hacked, and my fear, just like Mrs. DK, you will say, was, oh my goodness, I mean, they don't even have an office. Where do I go to? How do I tell them that I was debited? But I now send them an email, which I thought they wouldn't respond to. I sent them an email. I said I was hacked, and that my account was debited. And they got back to me and said they were sorry. There was nothing they could do about it, and there was no office I could go to complain. And I now sent them another email, and I told them that I have used Uber for the past 10 years, and I have never made a complaint, and that this is the last time I will be using Uber. And they got back to me. They first of all reversed the debit to my account, and they got back to me and said they were very sorry. They had investigated my account. They saw suspicious activities. They didn't tell me how the hack happened, but they acknowledged that I was hacked. And what did that do to me? It built my confidence. Now I can continue using them. And I think that that's one lesson that we need to learn as we go into digital lending.
Thank you very much, Dr. Tokunbo Martins. I appreciate that perspective. I think it just made the conversation very rounded. Thank you so much. At this time, we would like to take a quick poll. And so we'll be pulling up our poll just for, it take less than a minute or just a minute to answer. Please, would like you to just respond to the poll. The poll is on your screen now. Just 5 quick questions just to give us your feedback on this event. And if it met your expectation, and if you got some, expected insights, would appreciate if you could just take a minute to respond to this. We'll be closing the session in a bit, and we'll be calling on a board member of Action Microfinance Bank, Mr. Eddie Ogbogu, to take the closing remarks. But just before that, I just want to mention that Action Microfinance Bank remains at the frontiers in driving responsible financial inclusion. We see ourselves as an impact-driven organization, and as much as we want to help people come up higher economically, we want to make sure that financial services are delivered profitably, sustainably, and ethically. And this is what we stand for. This is part of our core values, and we will keep pushing the frontiers of this with educative seminars like we've just had to make sure that no one is left behind. And so I want to thank everyone for joining this session. I want to thank the panelists, and we appreciate your time. So at this point, I will be handing off to our board director, Mr. Eddie Ogbogu, for the closing remarks. Over to you, Mr. Eddie. Thank you.
Thank you very much, Paul. That's actually a very good seminar. This is my first of this seminar. Though you've been having it for 7. This is the 7th one, but this is my first, and I was quite thoroughly enjoyed being here. I'll start by thanking the chairman of the board, that's Christian Ruma, and the board members here present for this. and the board of ASEAN generally. My thanks also go to the regulators. I understand that there are some regulators in our midst from Central Bank and the NDIC. Thank them for joining us, and other invited guests, and the star-studded panels that you have, and at this point, I must salute the wisdom of the people that assembled these panelists, quite very, very valuable information. We are very, very eager to share their knowledge and experience with us. And they did that passionately as well. And at some point, I think I saw about 220 or 230 participants in the seminar, which is very, very good. And these are from different sections of the industry. But I most particularly single out the keynote speaker, Dr. Tukumbo Martin, who actually excellently handled the subject, sharing her experience, showing that she's actually a veteran in the field, taking us back memory lane to the 60s and the 70s and how we got here from the days of microfinance institutions from the 60s, 70s, and 80s. And she quickly brought us back to the current situation where we are and the challenges. And it was good that she mentioned that what the role technology plays. Technology, we know, I think she mentioned, is an enabler which accelerates and amplifies and improves what we do. But in doing that also, we must build the guardrails that will enable us to be able to do that responsibly and ensure that the customers that we are getting to have confidence in that. And we can see that in what one of the panelists, Mrs. Dike, had talked about, and the conversation that followed from that we must ensure that we have an environment that is secure enough that will give the level of confidence of the users and not be a disincentive and therefore become a barrier to the inclusion we are talking about. I must also thank the moderator of the panel, the panel one, that is Tolulope Babajide, for an excellent job. Dennis Monoite, Chuma Chukuma Nwanze, Olanike Kolawole, and for the panel two, Rukayat Bello, Nene Dike, Mrs., and Dr. Tomi Rumosole. Must thank you very much for sharing your knowledge and your experience. And it was quite insightful. And thank you very much for everything. I must thank the Mr. Taiwo Joda, the managing director, our managing director, and his team, quite all right, for putting this together. It was quite a very good, insightful, and very informative and impactful seminar. I'm already looking forward to the 8th edition of this seminar. And to you, Paul, thank you very much for navigating this and emceeing and hosting this excellently well. I never knew you had other skills other than your day job as the digital chief digital officer of ASEAN Bank. But thank you very much for doing an excellent job. So I thank you, everybody, and thanks for this, and we look forward to the next phase. The information from here, I believe, will be very, very useful for the practitioners in the industry in shaping forward the financial inclusion in Nigeria. Thanks.
Thank you very much, Mr. Eddie Obogu, Board Director, Axiom Microfinance Bank. Before we go, ladies and gentlemen, the panelists precisely would like you to just turn on your videos for a photo ops just quickly in 1 minute. Would appreciate if you could just turn on your videos for a quick photo ops. We want to capture everyone that was a panel member in the session today. Thank you very much. Okay, we have a few more to go. Okay, we're almost there. Please just turn on your cameras and we'll be done in a bit. Okay. We still have about 2 more panel members. Please just turn on your videos quickly and okay. All right, and we'll be done at the count of 5. 1, 2, 3, 4, and 5. And that's it. Thank you very much for your time. We appreciate everyone. Thank you for the closing remarks, Mr. Eddie. Once again, thank you for thank you for your time to all our panelists. Thank you to all our guests who joined the session. We appreciate you all and look forward to meeting you again in 2025 December for the 8th edition of the Annual Financial Inclusion Seminar. And thus, we're going to step things up in that one. Thank you once again, and let's all have a wonderful afternoon. Thank you.